I didn't bring it today. All right, people, I think we will start, and the governor should join us shortly. And I'm looking forward to my officially last session. Opening matter, roll call, please, Carrie.
Treasurer Eichenberg.
Present.
Commissioner Garcia Richard.
Here.
Secretary Padilla Jackson.
She's counting them.
Peter Frank.
I'm here.
Linda Eitzen. Here. Tim Jennings.
Here.
Harold Glavender.
Here.
Lee Rawson.
Present.
Michael Messina.
Here.
And Nicholas Tejas.
Here. Okay, looks like we have a full house except the governor who will join us. And approval of the agenda, are there any comments or suggestions or?
Motion to approve.
Thank you.
Good morning.
Thank you. Here we go.
Good morning.
Good morning. And all in favor of approving the agenda?
Aye.
Aye. Thank you. And
Aye.
good.
I should close that door.
Oh, sorry.
It's all right. Keep going. Sorry that I'm a
The
little
minutes
bit
of the
late.
prior meeting, are there any comments or suggestions or questions? Linda?
Motion to approve minutes.
Second.
Thank you. All in favor?
Aye.
Thank you very much. And we'll go to Steve's report and from the governor.
Just good morning. Even though
Morning,
I'm louder after Steve's report, and you may have noticed it is the legislative session, so I'm going to pop out and see if we can't get some momentum and positive response to the Sabega Trust Fund, which is at 10, so I apologize that we're in and out. And thank you for starting the meeting, Vice Chair. I appreciate that very much. And if I don't return, I'm on my way to Albuquerque for yet another added to the calendar. So I apologize. My goal is to do exactly what everyone else here is doing. This is important work and to be at the meeting. So thank you, everyone, and thank you, Vice Chair. Steve, you're up.
Governor, thank you for recognizing yesterday the good people that have been making contributions to the state. I thought that was a good thing, and I'm glad we've been doing it for 10 years.
The Journal Spirit Awards yesterday.
We don't do that enough, right?
Fair enough.
Good morning, everybody. Distributions will be the key topic that we will be emphasizing with anyone who will listen about the permanent funds for a while. I think it's important to focus on the fact that in fiscal year 2020, we'll be distributing $1.009 billion to the state, and in the next fiscal year, $1.07 billion. And you saw the press release that went out on that topic, and it's something to be celebrated. I think we will all agree. Distributions over the last 12 months have totaled $992,281,000. West Texas Intermediate is coming down quite a bit. As of yesterday, it was at $53.14. And Governor and Lydia, I think we're budgeting at $52 this year. Is that correct? So hopefully it won't come down any further. At least consistently it won't. The net asset value of the funds as of last evening, $27.304 billion. We are, Governor, I think I'll defer to you to introduce our new council.
I'm happy to do that. Everyone, welcome to Nicholas Tejas, who has joined us because both good and bad. We lost our member who is now the president of CNM, but we are delighted to have you. I know that folks who are on the table who know Nicholas or member Tejas are clear about his background and just their interest in both what we're doing and its impact on any number of issues, including higher education. So we are delighted to have you. Welcome to the State Investment Council, and thank you for accepting this very important appointment.
Thank you, Governor. I'm honored to be here.
That was easy. You're very welcome.
The second bullet under my opening comments, we're going to let Charlie expand on, and that's the New Mexico-centric severance tax permanent fund investing. Senate Bill 136 being sponsored by Senator Pete Campos. Under investment matters, distributions, that just recaps for you in the box there the numbers that I just mentioned. Year-over-year growth in distributions is another key point. $61 million from FY20 to FY21. You have the performance numbers under A3. Vince and Marcia and Matthias will be giving you more detail on that here in just a minute. Under council members, council matters, you see the 3 meetings that are scheduled for February. Olivia, under B2, will be giving you detail on governance committee recommendations and some requests. Under operations, we are looking for a couple of folks. Charlie continues to look for an analyst to help him with communications, legislative, and client matters. Vince, why don't you comment on the other search that we have begun, if you would?
So a few weeks ago, our fixed income director, Bart Suki, came in and announced that he was going to turn his paperwork in and prepare to retire. So where is Bart? There he is. So we'll be losing Bart at the end of February. So we've just begun, we're just in the initial stages of starting a search for a new fixed income asset class director.
Thank you.
We're sad to lose you, but congratulations on your impending retirement.
Thank you very much.
And how many years of service?
27 years.
Thanks, Bart. Carrie has created a new look for the dashboard that I think is well done, and I know it will serve us well. You have that in your materials. We continue our effort to educate everybody who should know about the permanent funds and to realize how lucky New Mexico is to have them. We have hired a new investment accounting analyst. Andrea Cohen joined us. I think she's going to be an excellent addition. Brent can comment on that here in just a minute. Under external relations, legislatively, Charlie will report to you in just a minute here about the early childhood fund that we hope will be established beginning in July. And also on our New Mexico private equity improvements in terms of what we can invest from the severance tax fund. Charlie, why don't you do that if you would?
Sure, and I'll be brief. What we're trying to do is we are tracking legislation this year. We're putting updates in the weekly report that you receive every Friday afternoon. And there are links there as well, so you can access just by clicking through the bill and the FIRs that are related. The 2 key bills that we're looking at right now, one is a dual track bill for the early childhood care and trust fund. Senate Bill 3 passed its first hearing yesterday, and will be up for its first hearing in the House tomorrow morning in House Education. Seems to be moving along. There was no opposition to that fund yesterday and no negative votes from the committee. Senate Bill 136 is our bill, the bill that we are pushing to increase the cap on New Mexico-centric investments from 9% of the severance tax fund to 11% of the severance tax fund. That bill was ruled germane by the committee, and hopefully we'll get a committee assignment. We don't have a hearing just yet, but I guess it's going to corporations rather, and then to Senate Finance, but we want to get that moving.
Who's the sponsor, Charlie?
It is Senator Campos is our sponsor, and he is, hopefully when we get to Senate Finance, we can move things along there. Sometimes things get bottlenecked. Other bills, just please look at that weekly summary, and if you have any questions or concerns, please contact me. And we're excited about session weeks, first week, second week.
Thanks,
And you're
Sheriff
still
Falker.
excited?
It's only the first week, though.
We'll ask Brett to comment on the House Appropriations and Finance Committee budget hearing we had on January 16 when we get to your report, Brett. And if you would also comment on the marvelous inflows we're receiving from the State Land Office. Thank you, Commissioner.
Can't have outflows without inflows.
Thank you, Governor.
You're welcome. All right. I'm going to keep letting, please ask the vice chair, since I'm going to leave in about 10 minutes, but we're on to the second report, so we're going to go to Vince.
Thank you, Governor.
Very much. The CIO
Lots and
report.
lots of news out right now on the macro front. The annual meeting in Davos, Switzerland is taking place. Lots of news coming out of that. The meetings are a little more upbeat than they were last year. Unfortunately, Davos tends to be a contrary indicator, so I'm not entirely sure what exactly that's going to mean for us. The global economy is still slowing down as we expected, but it's starting to look like it's bottom. We're starting to see some leading indicators bottom and maybe start heading north a little bit, particularly over in Europe. We're headed down, but we expect second quarter. Back in 2018 when we entered late cycle, we sort of pegged the second quarter of 2020 to be the low point. We thought we might have a recession, but the chances of that look pretty slim right now, at least less than 20% probably. But it will be it looks like it will be the low point, at least here in recent times. So we're still decelerating into that. We'll maybe have 1% annualized GDP for the second quarter, pretty low, but that may be the bottom at least for now. The main reason is the world is absolutely awash in liquidity. The Fed was getting interest rates back on track, cutting down its balance sheet some, but it reversed course and cut interest rates 3 times. It's been very, very active in the repo market. The repo market, as you know, is the primary way banks and large businesses finance themselves in the very short run, overnight. And that market really dried up quite a lot, and the Fed's entered that market. So there's just a ton of liquidity here in the U.S. Foreign central banks are doing the exact same thing, not so much in the repo markets, but with low rates. We still have negative interest rates throughout Europe and in Japan. So there's just a ton of liquidity out there right now, and that's keeping the economy from slipping into recession, at least for now. So far so good. That's why we've seen stocks do so well lately, is a lot of that liquidity is finding its way into risk assets, in particular the stock market. We've had a little sell-off here the last day or two because of the health scare out of Asia, but those things tend to be transient, not fundamental to the markets. The only other comment really I'll make is with the recent run in stocks, we've hit probably what is a record high in the market. And we're at a 31 Shiller, and you're all familiar with the Shiller ratio. I talked about that a lot. In fact, we've been talking about it since 2015 when it crossed over 25. Once it crosses over 25, future expected rates of return for the following 10 years are usually below average. Once it crosses over 30, we almost always get low returns for the next 10 years past that. We're at 31 now. The highest it's ever hit was 44. That was in February of 2000. That was primarily because the stocks that were leading the stock market higher in those days basically had no earnings. So there was nothing in the denominator of the Sharp, or in the Shiller ratio, and lots of price in the numerator, so the ratio went up to 44. Today, we've got very strong earnings in the denominator. In fact, one of the reasons we use the Shiller ratio is it captures the previous 10 years worth of earnings. The reason they do that, the reason Professor Shiller does that, is because you almost always have at least one recession in that 10-year period, so it captures the full economic cycle. This time, the last recession has rolled out of the Shiller. That was 08, 09. Here we are in 2020, so we've got 10 years of strong earnings in the denominator, and we're still at 31. So very high valuations on the stock market. Very much keeping our eye on that and what that means for our potential future rates of return. So I think that's all the comments on the current situation. Just one note about the next few months. We'll bring a couple of investments to you in February, but beginning in March, we'll start the run up to the asset allocation for land grant and severance, which will finish up by June. So we'll have 3 or 4 months of sort of education on asset allocation, future expected rates of return, different portfolio mixes, a lot of that kind of top level macro things are coming at you March through June. With that, let me turn to Marcia Cuse for performance.
Sure, maybe I'll have you turn to page 19 of the diligent materials. And we have the November materials for you. We're starting to look at December as well. And next month, certainly we'll be back with the full executive summary that has the full information along with the relative rankings as well. On page 19, on the top right-hand side, you can see the asset allocation versus the interim. Continue to try and align those with this type of a market. It's a moving target because there's a lot of movement there, and I'm trying to take some off of equities and then rebalancing within the fixed income. So that's going to be a continued effort. On the bottom half of that chart, you can see the performance summary. Fiscal year to date, so that's the first 5 months or so. You can see up over 3%, pretty good run rate for these first 5 months, given what our target is. December added another 1.5% or so, 1.7, so a little bit ahead of that. But as Vince mentioned, we're certainly tempering our expectations for the future in terms of return, not necessarily for the fiscal year, but are very cautious in terms of where we are from a valuation perspective. You can see a little bit of softness on the relative performance on the fiscal year and calendar year today, even though they're very much in line. Much of that has to do with the more defensive positioning of your portfolio, both on the equity side where you have a little bit less equity beta. Again, very prudent given where we are in the cycle of stretched valuations based on what Vince was talking about. You look at PE and other metrics, not just PE. And same on the fixed income side. So much of the year as rates were coming down further, the lower duration that you have in the fixed income portfolio was a little bit of a headwind. But actually November, as rates went the other way, we're helping out. So again, we're still very constructive on the positioning of the fixed income portfolio. And Bart will actually talk a little bit about that more today. I think the other noteworthy item here, and we'll have some more information once the December numbers come out, but here you can see some divergence between land grant and severance, particularly when you're looking at the 1 year period. Much of that, and this is not new for those that have heard us talk about this, is at least at this point in time, due to the in-state private equity program, that tends to be more episodic, some underperformance, and at times it can catch up. And so we're at a point though now where we certainly see about 80 basis points of difference there. As I mentioned, we'll come back with the December numbers and the full calendar year, but it turned out very differently than last year, so we're pleased with that. On page 20, you can see the schedule of investable assets. And just a couple comments there. You'll notice as you go down the column, the net cash flow is still positive, so that is money coming in versus money coming out. That's constructive in that sense, and I think a few other noteworthy items. We'll continue to address these when we move through the asset allocation and the intergenerational equity. You may recall the Water Trust Fund and the position that they're in with the hard $4 million annual spend. You can see that reflected here. No money coming out, so that represents 10% of the beginning market value. So that's something that needs to be addressed, and we'll continue to talk about, although this year with this type of a strong capital market, you actually had enough gains to offset that, but that's unusual.
Matthias, if we may, Charlie, would you comment on the Water Trust Fund bill that we're seeing?
So what the Water Trust Fund bill that has been introduced, and this is under the purview of NMFA, I believe they're seeking an appropriation of about 40 million. Sorry, the number escapes me. But essentially, they want to put in, the original concept was to put in 100 million and have this be a perpetual fund. This 40 million would get you close to that. It put you up around 80 and make the fund, well, it would take it off its terminal path. Right now, it's distributing 4 million a year. It's a 10% distribution. It can't survive like that forever.
Thanks.
I think the other noteworthy item here is the external clients continued strong inflows, and I think it's testament to the good work that SIC is doing in terms of attracting capital and providing a great service to that end, and the gains certainly speak for that. On page 21, I won't cover this in great detail again because it's inner quarter. We'll come back next month with all the full detail. You can see here the asset class performance relative to the benchmarks. U.S. equities certainly very strong on an absolute basis. Calendar year to date, so those are the 11 months in 2019 through November, up over 26%. Underperforming the benchmark a bit for some of the comments already made, a little bit more defensive, but again, 26 versus 27, both very good numbers. On the non-U.S. equity side, strong relative performance and still very strong absolute performance, up over 18%. That relative outperformance is coming both from the developed and the emerging side. So that piece is doing really quite well on all accounts. Within fixed income, as I mentioned, certainly with rates coming down throughout most of this year, not in anticipation or expectation of most market followers, but we saw some underperformance for that period. But again, in the more near term, as rates have reversed, seeing that unwind. So quite pleased with these results, and we'll see when private equity and real estate come in. I think we'll see these numbers improve even more. So happy to take any questions or comments at this time.
Mr. Chair, Matthias, just a question. The investment return for the tax stabilization reserve fund is so much lower than all of the other funds. And I know that's a reflection of the asset allocation that this council approved. I just didn't realize there was going to be such a huge difference in return, because I don't think the risk profile is that much different. And so
you bet, and it's hidden in the footnotes. Unfortunately, it's mostly a timing issue. Okay. So most of these numbers reflect calendar year to date. Okay. The tax stabilization reserve really only half of a year, not even that.
July.
So yeah, July 2019.
These numbers aren't.
It's not the full year, so it's a shorter time period. If you were to expand it, you're absolutely right. We would expect a higher return, but probably lagging because of the allocation, the pool sum.
And just one last comment. Mr. Chair, I think it's something that we need to keep an eye on. You know, when we scored that legislation, I think that there was expectations that it would be earning 5%. And so I think if you said this was 6 months, so in any event, it's just something for us to kind of look at to make sure that's not lagging too far behind the other funds. Otherwise, we could be, at the treasurer's office.
Let Vince comment on that.
Okay.
The long run expected rate of return of 5%, is based on our long run assumption. So in any short period of time, you can find it under 5. In any short period of time, you can find it over 5. But we do expect that over the long run, 10 years or more, we would see an average return of about 5% for that fund.
Good insight. I think we will turn now to the investment committee, and Linda.
Okay. The investment committee met, all members were present. We voted on the issues that are, matters that are before the council today. We voted unanimously in favor, except for the Kickstart, which is the New Mexico private equity program, where Member Lavender recused himself for potential conflict, but otherwise we voted unanimously on it. We also heard the same, maybe even a little bit more, outlook for the next 10 years on market returns, and looking at that, we can see what a challenge it's going to be to have meet our goals, our target goals for these funds, because we just don't have those type of expected returns. That's why it's going to be so very important when the asset allocation study comes, for us to see how we're going to be reaching for 25 or 35 basis points of return. This is a reach for us. It is hard for us to achieve our goals, and this will be very eye-opening, especially for those of you who have not been through this exercise before. So just a little look forward to the asset allocation study and what our target goals are, how we think we can possibly achieve them, given the market that we believe we're going to be dealing with.
So remind me who's on your committee now? It's you and Harold
And Mike.
And Mike, that's right.
And we're looking for another advisor position, that kind of stuff.
Thank you. Thank you.
Just one comment to tie into
Yes.
to Linda's comments. You'll be facing something that boards around the country will be facing also, but have never had to face in the past.
Yeah.
We've not had a combination of interest rates this low
Right.
and risk markets this high ever in modern history, just back to the 20s. And even then, interest rates were higher than they were today. So you've got a combination of very expensive fixed income markets, meaning rates are low, very expensive risk markets. While other boards like you will be facing that same thing, it'll be the first time that we've collectively had this sort of environment. So we're going to take a lot of time and spend a lot of time on those things starting in March.
Good, that's good. All right. Cortland, partners. That would be
Mr. Chairman, can I ask Beth just one question? As we've seen the market escalate, in general, we've seen our advisors, our managers underperform because, all boats are rising so fast. So do we expect, as things temper back and the markets go down, do we expect managers to outperform?
We would, yes. Those portfolios, particularly the domestic equity portfolio, is structured such that in down markets will do better. In really high-flying markets like today, liquidity-driven markets like today, we'll do a little more poorly. One of the reasons that we're underperforming now is that the leadership in the market is so narrow. There's just a handful of stocks that are leading this thing as high as it's going. Our managers would tend to be underweight those stocks because of valuations. A good example, though, would be last December a year ago, December 18. You saw how much that portfolio outperformed by almost 200 basis points just in that 6 weeks.
Thank you.
all right. Please, Seth, why don't you introduce where we are?
Clay.
I'm sorry.
No, you're fine. I'm Clay Camper. I'm with the Real Estate Real Assets team at the New Mexico State Investment Council. I'm joined today by Seth from Townsend, whom everyone knows, and then also from Chris and Mike from the Cortland team. Staff, alongside Townsend, recommend a commitment to Cortland Partners Growth and Income Fund to be considered within the core allocation of the real estate portfolio in an amount up to $100 million. Please note, for those that are longtime members, that this Cortland is spelled differently and has no affiliation with our pre-Townsend real estate consultant and advisor, Cortland Partners, which has since merged with Stepson, so no affiliation there. The genesis of this investment was our desire to maintain our existing multifamily exposure on the back of the termination of Berkshire Multifamily, which you guys all previously voted on. Cortland had previously been brought to our attention by Townsend ahead of that, and we evaluated Cortland along with multiple other open-ended multifamily real estate funds as we move forward, ultimately selecting them. I'm going to keep my description brief as to not steal anything, any thunder from the Cortland team, but I will provide a few quick highlights really quick. Cortland Growth and Income Fund, CGIF, is an open-ended fund, so no closed-end set 10-year time period. It's perpetual. It's a core plus fund focused on U.S.-centric income-producing multifamily properties. They'll target 10 to 12% gross return, with approximately 60% of that generated from income. Importantly, as already previously alluded to, CGIF is approved. It'll help provide a consistent base of exposure to our multifamily or apartment exposure within our real estate portfolio. You may recall that we are striving for a slight overweight relative to our real estate index when it comes to multifamily, with an underweight to office, an underweight to retail, an overweight to multifamily, and an overweight to industrial, along with an overweight to others outside of that group. And this will when you have an open-ended fund, open-end funds really help you keep a consistent base exposure that we have a little more control over, as opposed to closed-end funds, which either have the option of going to multifamily or not, depending on their style, and or we just can't control the timing of the cash flows when they call capital and when they distribute capital back. So maintaining exposure to open-end funds are an important piece of that. This will be a new investment with a new manager, as is common in these situations. The State Investment Council has requested and will be granted an advisory council seat. With regards to the fee, please note that the State Investment Council has been granted a perpetual and very significant, currently confidential, founders fee incentives, which can be referenced on page 9 of the research report or page 59 of your diligence. So a good news for us on that standpoint. So why Cortland Growth in Income Fund outside of the attractive fee? A lot of standard items you would expect. They have strong performance history. They have a very strong team. As we go across the landscape, I'll highlight just a few items that we felt that they did a little bit better than their peers and why we think that they're especially suitable for us today. Vertical integration. So a theme you're going to see across both Cortland and other multifamily funds you'll see us bring in the future is vertical integration, basically integrating the investment components along with having their own property management and their own construction expertise all in-house, helping save costs, removing red tape. Cortland takes this to a whole nother level, which I'm going to let Mike go ahead and describe a little bit further. They also have a very strong focus on customer or renter satisfaction. It's a very token statement. I think anyone we meet with, we've never met with a manager, they would tell us that they don't care about renter satisfaction. However, some people definitely shine a little bit above in that regard and really show meeting after meeting after meeting, making sure that that point is a point of emphasis. Akin to hotels, renters are becoming more discerning across the entire multifamily landscape and really trying to get more than just trying to say, what does the inside 800 feet that I'm living in look like? And so we see this as a very important focus on a go-forward basis with our multifamily managers that we're evaluating. As far as primary risks, you guys have seen Townsend's report. You have that. I won't go through the number of bullets and different risks. So the main one that we really focused on and considered a lot was being in the founders class of a new fund. This is Cortland's first open-ended fund. Ultimately, both us and Townsend were able to gain a lot of comforts about the strategy, about the broader firm, about the people in place, and about their capability to raise a fund that can grow, that can become a true open-ended fund to allow contributions and distributions to happen for rebalancing purposes on a regular basis. I should note that the NAV of this fund is currently just under $700 million today, and it corrects me, but that's already larger than the high water mark of the fund that we're replacing, and that's without considering additional large allocations, ours included if it gets approved today, that'll go in the queue and expected to close by the end of Q1 2020. So this is something we really seriously considered, and we feel that they're very well on track to be a very solid, open-ended strategy and provide the type of liquidity that we hope to expect from those strategies. Of course, the recommended investment in Cortland Growth and Income Fund is in compliance with all our investment policy and statement parameters. With that, I'll pass on to Seth really quick in case I missed anything. Let's make sure we get.
Thanks, Clay. Thanks, everyone, for having us again. Clay covered pretty much everything I was going to say, so I'll maybe steal 30, 60 seconds and then hand it over to Cortland. So just as a refresher for new members and just thinking about last year, in 2019, we made 2 new open-ended core Cortland fund commitments. One was to a Beta Odyssey Fund, Lion Property Fund. That was to expand just the core portfolio. And the other to Carlisle, which was a more core plus demographic-driven fund to really be a little bit higher risk, higher return, but still within the core sector. These prior commitments were really driven by some of the rebalancing and redemptions we talked about, as well as the TSR capital that continues to flow into the fund. But both of these funds also earned their way into the portfolio. It wasn't just a capital allocation. Cortland is in the very similar same boat as those 2 funds, earning its way into the portfolio, excuse me, based on a lot of the comments that Clay just made, but also being a dedicated multifamily manager. It's focused on expanding the multifamily exposure within the SIC's portfolio with a strong vertically integrated manager. While this is a new fund for Cortland, for the manager, Cortland is far from being a new manager in the space. They've been investing and managing multifamily assets both on a discretionary and on an institutional basis for over 15 years, primarily as an operating partner for large open-ended community funds like what you're investing in today, as well as on the development side. So I'll stop there, hand it over to Cortland, let them explain what they do and why they're here.
Sure, and I'm Chris Lennon. I joined Cortland 1 year ago, and I worked pretty closely with staff through the process of onboarding this investment. I'm here primarily to answer questions as they may relate, as they may come up. But I'll turn it over to Mike, who's the portfolio manager for the fund that you're about to make an investment in.
My name is Mike Altman. I am the portfolio manager of the Growth and Income Fund, and it's a real honor to represent the firm today here with the State Investment Council. I believe everyone has this deck. I thought I would just touch on a few points that Clay mentioned and just try and explain just a bit more about our firm and the strategy of this proposed investment. You know, Cortland is a multifamily company. We really come from the rental housing industry. We've been in this, dedicated and focused on rental housing, as they said, for about 15 years. And the reality is, we haven't, been distracted or diverted when the single-family housing space was really popular. And that really is sort of a belief and a commitment that housing is more efficiently provided to the middle income sector of our country in a rental format. And that format allows us to provide services, maintenance, and ultimately a great experience for families to live at our communities. We do so across major metros, across the Smile states of the country, going as far.
You said the what?
Smile states.
Is that what it is?
Smile states is sort of this arc of between Washington D.C. down through the southeast, across to the Mountain West, and we go. Our portfolio today is currently as far west as Phoenix.
Are we a Smile state?
In fact, you are.
Oh yeah, we can do that smile.
In fact, New Mexico is. And out of our Denver office, we have been pursuing Albuquerque-based investments for over a year now. In fact, after this meeting, we're going to join those teammates down there looking at some investments. As Albuquerque and New Mexico as a whole is ranked amongst our internal econometric studies as the 5th fastest growing market in the country. So very much so looking to expand into New Mexico and other Mountain West states in general. The markets that we do invest in are really the major metros throughout Texas, Georgia, the Carolinas, Florida, Colorado, Arizona, and we do so in both the suburban, right, looking for sort of that commuter belt, that first ring outside the urban core, as well as some urban environments, but really focused on a suburban overall experience. We have grown the firm really around this premise of putting the resident centric in everything we do. If you're able to flip through the document to page 9, you'll see a wheel, and I'll just touch on 2 things very briefly to try and support what Clay said around how exactly focused on the resident experience we are. And when I mean that we put the resident focus in everything we do, every piece of the vertically integrated platform is really focused on delivering value to our resident. Because we believe if we take care of our customers first, then our investors will be happy. And we do so really in 2 distinct ways. You see this pie chart broken up in blue and green pie pieces. We call the left side the value creation side, and the right side the value enhancement. The difference is really you create value often when you acquire a property or you're going through a renovation, you're trying to create that business plan. So there's a variety of different internal capabilities to create value. I think, in fact, more importantly is, in fact, the value enhancement side, which is the longer duration of activities around property management, around marketing, ensuring we have a great resident experience program on site, and most importantly, to our residents, great facilities and care taken to maintain and care for the apartments themselves. We'll jump just a few slides deeper. I'm on page 14 now. and just touch on one value creation and one value enhancement tactic, which I think is supportive of this overall premise. First of all, Cask Industries is a subsidiary company that Cortland, in fact, designs and manufactures all of our building materials, everything you would see inside a residential unit, except paint, carpeting, and appliances. We do so with the intentionality of creating low maintenance, better quality components. Anecdote would be our plumbing fixtures are made out of brass instead of plastic cartridges. Things like that that we will be able to benefit from for longer duration holds. We believe that that in fact is very well matched with the perpetual life of this fund vehicle. In addition to the value creation, I'll just point to the concept here on page 22 of the value enhancement. I appreciate your comment that every manager says they're focused on their customers. We spent a lot of time measuring just that. And you can see that over the last 7 years, you can see how our overall satisfaction scores have improved year to year. Sitting today at 4.43 out of 5.0, these are based on resident responses to surveys of every time we touch a unit or go through a work order. What that has resulted in is on the next page, which shows how we have been able to outperform same store results in our markets by 59 basis points of rent growth. That compounded over 5 and 10 years can create great returns for the fund holders, and I believe is also creating great returns for our residents who are enjoying a higher level of satisfaction with their living experience. We very much appreciate the consideration of this investment, and we look forward to continuing to pursue our mission of creating value for a better life. Thank you.
Are there any, yes, Stephanie?
Thank you, Mr. Chairman. And so I'm on Townsend's presentation, it's page 55 of diligence.
Page what?
55.
55, thank you.
So either to Seth or Clay, with this being a brand new fund, just in general, what are our interim sort of measures that we track to make sure that folks are where they need to be if we don't have any track record to go by? What do we have in place as a council or as an agency to track interim measures?
Sure. Yeah, sure. So what we, I won't say what we do is we don't set a hard number that we expect them to be at. We are going into this long-term partnership and we'll evaluate it as such. However, I did mention that we're going to be on the advisory council. And so what the advisory council is, most every fund has a smaller subset of their underlying limited partners that come and are part of voting matters. Certain voting matters relate to the fund, and also generally get a little bit more insight and more access and regular touch base and connection with folks like Mike. And so we'll be touching base with them regularly. We're going to have semi-annual and annual meetings and going through this stuff. And some of the main things we look at as we have been through this, and then we'll be asking and touching base with Chris on, is what does your queue look like? Do you have money coming in? Do you have money going out? What does your pipeline look like? We want to make sure that they have a regular and ongoing pipeline, and that they have the underlying systems and structures to have that pipeline, so that when they go out to market, they can honestly and earnestly tell clients like ourselves, or future clients like ourselves, that, hey, we have a place to put your money here. It's not going to be sitting on the sideline for a year while we're waiting to go find opportunities. You've heard Mike allude to that today, right after this, they're going to look at opportunities in Albuquerque and potential sites. So we want to see a very consistent sourcing play, that we know that they're always looking through and have places to put money, and potentially other partnerships or other funds that can act on that if this fund can't, so that way they can keep people engaged and regularly going. And that also that they're growing their fund, and that they also have a pipeline of underlying limited partners like ourselves looking to this space. So I'd say that's a few of the qualitative aspects that we're on top of very regularly and pass very deeply about in our development.
Are there quantitative?
I think the other point is, so yes, this is a new fund, but as mentioned, Cortland has a track. It's not, they're not coming at this, as an organization that started 18 months ago and just starting up. They have a 4 non-core multifamily funds. They've also owned and managed a number of open-ended, or not open, core investments in the past. So we've had an ability to underwrite that track record historically. Again, not in this fund format, but by the same team, by the same organization, and we use that as the sort of background for how we underwrite.
And for some quantitative metrics for comparative example, on our other multifamily fund, which unfortunately didn't do scale, has done extremely well for us and managed our money very well, just didn't get to scale like we would have hoped. They had 13 assets in the fund. These guys are already at 21 now, recently. So 21 assets and their larger assets, so there's actually more units and diversification. So in the event that there was some liquidation factor, that they could theoretically sell a property or two and still have a diversified fund, which is always a concern if they don't get enough properties underneath, that they start whittling away their diversification, and then the other LPs who are not getting out start raising their voices. So we kind of look for that balance there. It's never perfect and ideal, but those are all our things we consider, and it's something that we took very seriously with these guys when we were on the back of our prior experience, which again worked out very well. Unfortunately didn't get to scale.
The last point I'll make, not to belabor the issue, but a lot of the new open-ended funds like this come with a lockup period. So the investors that actually committed day one, when there was no assets, when there was no scale, did have a 2-year lockup. That we anticipated actually having a 2-year lockup with our commitment, but that was recently removed from the fund. So we aren't locked up for any time period. We have full ability to come in and come out as necessary as we feel. But typically these type of investments do come with a lockup because of the success that Cortland has had raising capital, investing capital, and then on a returns perspective, they felt it was easy to remove that.
Yeah, and I'd say one thing, we just want to make sure when we do our due diligence, we realize that open-ended means the ability to get in a queue to get out. It doesn't always guarantee immediate access to get out. As such, we want to make sure we're getting in with trusted partners, and that's always number one. Is do we feel like we're in people that, even if we're in there for a duration longer than we think for a portion of our money, we're happy that it's in there with these people. And so that's always coming.
Any other questions? Yes, Tim.
Thank you, Mr. Chair. Do you invest in low income,
In what?
affordability?
Low income, thank you.
None of our investments have regulated tax credits or income or rental restrictions, but I really do think of ourselves as investing in what I call affordable luxury. So really not in this Class AA space. We really are in sort of the middle band of renters and households. Our typical household across the whole portfolio, household incomes range between 30 and 90,000 plus, with an average right around $60,000 income for a 1 or 2 household family. And what's important is that the household or the rental rates to their income is right about a ratio of 4 to 1. So there's 4 times their income to their rent payment, whereas HUD or affordable guidelines would really point to a 3 to 1 ratio. So our resident base is actually has more affordability, if you will, in our overall portfolio than sort of industry metric standards.
Relative to the really expensive cities in the U.S., that's getting probably 2.5 to 1.
Yes, Tim.
Oh, okay. I was just curious, when you had on your supply chain, so you go in and you use, brass components rather than plastic, it makes a huge difference in most markets. They just last so much longer. But now do you just put all this, have Shanghai or Chinese manufacturers to build your products for you, specifically for you?
Well, we do have an office in Shanghai, which I believe has 13 teammates. Those teammates are both handling logistics, design, and quality control. I believe that the sourcing happens in something like 11 different countries, different places that we can source building materials. It depends on what type of material we're talking about. granite countertops for instance, really come out of Brazil. You know, maybe lighting is a very Chinese dominant commodity, whereas cabinetry is really coming out of Vietnam today. So we have a variety of different sourcing relationships. We don't own any of those manufacturing facilities. We are really directly contracting with a manufacturer to produce a specific quantity of products that we have designed and have all U.S. regulations approved and ratings and testing in hand.
And just add, these are often the same factories that are sourcing for other brands you might recognize, like Moen, for example. They would just also contract for us. It's the very same factory.
Okay. Then, your parts might not necessarily be interchangeable. I mean, is that correct? I mean, yeah. If you have a faucet, if you have a Moen faucet over there and it goes bad and they Moen bills your deal with their Moen parts interchangeable with the faucets that you use, or do you have to buy your own faucets?
Yeah, no, sir. The parts are absolutely specific to whichever fixture or product we're talking about. We both service those through HD Supply. And we have a variety of different vendors that are able to stock in their regional warehouses to deliver to us to our properties in real time. So that part and maintenance system is really intended around having less work orders in total. But if we have any sort of work order call, we're prepared to respond.
The other thing I just noticed, it's interesting, when you look at your company, where you invest, you tend to leave out an awful lot of the to me, just a lot of the older states that probably have some significant problems as far as property tax and debt on pensions and other things. It seemed like you left all those out of this, which I thought was interesting. Which, as we go through some of our debt problems, they're not near as bad as they are in Illinois and some of those other states, so that's interesting to look at. In warmer cities, I mean, you don't see, I mean, there's not a lot in Chicago, or didn't see any in Baltimore, or any of those cities that are a little older and more established, which I thought was interesting. The other is, what do you do in your properties? Do you have dispute management teams, or how do you handle disputes among tenants in your facilities? Do you have any specific?
It's every property has staff, right, which would be both a community manager as well as a service manager. In a very rare instance, if there was some form of argument between tenants, that'd really be the community manager trying to have an interaction with those residents and try and work things out. Thankfully, I think that's a very rare occurrence. We really haven't seen any resident or tenant related issues that have become sort of a problem as opposed to one-time events.
I just look in today's time, there's been some very significant events happen where you have higher concentrations of people, where people are very susceptible to being targets, and it just seems to me like there will be some levels of training and dispute management and safety.
Sure.
So that's all. Thank you.
Yes, thank you. Good comments, Michael, please.
Yes. I would like some clarification about one thing. I thought you said, what I heard, that you produce materials that are used in the units for either reason, which sounds great. But then, are these produced just by specs you provide with third parties, or do you have any ownership interest on that level?
No, we have no ownership interest in any of the manufacturing facilities. We are really providing a design and a specification to large existing manufacturers that we have diligenced, and then they are producing that that order specifically for us.
You know, I just wanted to get clarification if you had any interest in the pricing to you, other than to try to get the best deal you can.
No, there's no interest amongst any of the subsidiaries beyond that, but beyond Cask Industries, and these products are really passed through to the assets really at our bare bones cost.
Thank you.
Very good. Yes, Nicholas, welcome.
Mr. Chair, I had a question on what kind of like risk assessment, risk management do you look at in terms of, the housing market that you deal in and also the rental market? If you just comment a little bit on that. I just bring that up because with so much kind of volatility that we're talking about in various areas of investing, when I hear about housing, I go back to the housing crisis a while back, and I'd just like to hear your thoughts on it.
Yeah, absolutely. Well, through our business analytics team and our chief economist, we actually produce our own forecasts of all markets across the United States that we may want to invest in or are currently invested in. We cut that off right about 700,000 population size cities and larger. And we look at a variety of different factors to come up with our view of the market. We then are able to compare those markets amongst each other. I mentioned Albuquerque currently is ranked number 5 nationwide. Some of those factors around supply. Certainly population migration is one of the, I think, biggest trends amongst our country's overall housing demand. To your point, moving out of higher tax or more expensive markets in the Northeast or perhaps Chicago and West Coast, moving towards more business-friendly environments like Texas, Florida, Arizona. We also really do pay a lot of attention to the single-family market. When you see housing appreciation in the single-family space, you know that rents are sort of tracking along that. At the same breath, if you see an oversupply of housing at the single-family, you're seeing more single-family construction than demand, you know that your renters are going to then be incentivized to move out of a rental community into a lower cost or perhaps even a distressed new construction developers community. So we watch both parts of that market, really focusing on population movement and then of course employment.
Thank you.
Lee, you had a question or comment?
Just a couple of questions. In terms of your average unit size per complex, I'm sensing that's a little over 300, is that right?
Oh, number of units per
property?
Yes, I think that the number is just over 300, yes sir.
Okay. And just kind of back to this supply chain and service. My sense is that that is a separate entity and it's more of a vertical integration, and that the fund is assessed fees to the other managers that are owned by Cortland, or the other companies that are owned by Cortland, is that right? So it's kind of the fund really doesn't gain the advantage of Cortland's process because Cortland has other corporations or whatever set up that are capturing some profitability along the way, is that right?
Well,
I mean, through the vertical integration?
Yeah, if you look at page 16, I can answer that question with some specific quantified information. First of all of our firm has really been designed as an umbrella, meaning there's really one Cortland, so any form of vertical integration is owned by and is within sort of the overall umbrella of firms. There's no disalignment of interest in subsidiary companies, first of all. Second is, what we have done over time is in fact delivered these products to market at below market pricing relative to builder grade suppliers, right? So we're able to benchmark the products that we're delivering via Cask against commercial wholesale building material suppliers, and a variety of different things from electrical and cabinets to lighting and hardware, etc. And we've achieved about a 35% average savings relative to market. And there is, in fact, no spread or profit made by our CASC team. It really is intended to be a direct throughput to create better investment returns.
Okay, but you are buying, my perception is that if you go out and buy a property that you need to
Renovate.
remodel, enhance, or bring up to speed, you're going to contract with another Cortland company
Yes.
to do that work.
Yes.
Right? Okay. And really, the last question I might have to you, Clayton or Seth, you mentioned in your opening comments a little bit about industrial, which kind of ties into some of this outsourcing. Are we expecting or seeing more companies relocate back to the U.S. and therefore that's creating more industrial demand?
So on the industrial viewpoint, there is somewhat of an impact of PMI, Property Manufacturing Index, that does go into that, but it's actually the smaller components of the kind of industrial growth story. A lot of the current industrial growth story is centered around the e-commerce secular demand driver of changing from going to Walmart and buying through Walmart or Amazon online and having that delivered at my home, which, so I think it requires, I think it's like 1.5 times the amount of space, you know, for every industrial. So if you have to have a store at Walmart, it takes 1.5 the amount of times of industrial space to actually go through process and deliver that good online through an industrial warehouse and build out that network across the country to get that 2-day and now 1-day delivery that we all kind of expect and demand. And that's really been the underlying driver of industrial. And so that's, and then the important things we kind of watch there and we're trying to focus on is, because it's the hot sector, is there amount of oversupply? And that's where we're really talking to kind of our trusted advisors like Townsend, and then a lot of our folks that we've been in a long time, like Clarion Line Industrial Trust, that we've helped for many number of years, to look really closely at the supply picture, which is almost probably, I'd say, our greater concern when it comes to industrial that we zero in most right now, is making sure that that doesn't get oversupplied, because it's the hot sector.
So the industrial is more an issue of warehousing and manufacturing in the current market.
Yeah, particularly the marginal growth story aspect of it.
Are there any other questions or comments? Are we ready?
Based on the recommendations of the Council Investment Committee, Real Estate Advisor, the Townsend Group, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of up to $100 million to Cortland Partners Growth and Income Fund, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. Do we have any other questions or comments at this point? All in favor? Aye. Any opposed? So unanimous approval. Thank you.
Thank you very much.
Good luck. Our next is the private equity, Kickstart Seed Fund. David Lee, yes.
Good morning. We're here to talk about Kickstart Seed Fund 5. I'd like to introduce Richard Pugmire from Mercer, who you all know, and also Gavin Christensen and Dalton Wright from Kickstart. They're both partners at Kickstart. Before I launch into some summary comments, I do want to share a bit of good news. Since I don't do this very much, but in the New Mexico program, you'll recall that we did make a $10 million commitment to Anzu Industrial Capital Partners 2 in November, and we found out basically 2.5 weeks ago that they had made over $8 million investment in a company in New Mexico called Nature's Toolbox. formerly NTX Bio. So we're very happy to the commitment that they've demonstrated in New Mexico, and we actually expect further New Mexico investments from them. In terms of Kickstart, this is a startup and seed stage venture capital investment strategy for the New Mexico program. Kickstart targets investments in technology companies, particularly software companies, but also opportunistically in healthcare, consumer products, and hardware. The strategy and network of Kickstart emphasizes investments in the Mountain West region. They currently target about 2/3 of their investments in Utah, and the rest will be focused on the states of New Mexico, Colorado, and Arizona. Fund 4, which SIC has a $7.4 million commitment, currently has 3 investments in New Mexico: AdWallet, Robotic Skies, and Trilumen, excuse me. The initial check size that Kickstart looks for their funds is usually between $300,000 and $4 million, and additional funds are reserved for each company and contingent upon achieving certain milestones. The portfolio, the way it's constructed, it has about 40 companies. About 10% of the capital is dedicated towards what they call labs companies, which are a little bit earlier stage. 70% of the capital is considered core, and that goes into about 20 companies. And then the last 20% is dedicated towards things that are ramping. The firm has been investing since 2008. Distributions are somewhat low, but much of the capital has been invested over, since 2014, about 70% has been invested. So this is more of a more recent phenomenon as fund sizes have grown. The seed stage strategy does imply some higher loss ratios and longer hold periods than, for instance, later stage venture capital. Last 2 things I wanted to mention. Kickstart Collective, which is a series of events that Kickstart hosts, which brings CEOs and portfolio company executives together to share knowledge, best practices, anything that can help the other companies. And Kickstart Collective also assists in recruiting senior talent for portfolio companies, which you'll hear about with AdWallet. The second thing I wanted to mention is that the Campus Founders Fund, which is also something that Kickstart is known for, utilizes small investments from Kickstart funds to empower students to source, research, and recommend companies found on their college campuses. Campus Founders Fund is expected to expand into New Mexico during the term of Fund 5. This fund has a target of $90 million and a hard cap of $110 million. Fund 4, for perspective, was $74 million, and Fund 3 was $39 million. So staff and consultants recommend a commitment of up to $7.5 million in Kickstart Seed Fund 5 for the New Mexico program. And with that, I'll turn it over to Richard for any further comments.
Yeah, I'll just say 2 things. One, when looking at Kickstart, it is a re-up for the New Mexico program. And so we have the opportunity to look at what they've done in New Mexico in the last commitment. They have been active looking at, they did invest in 3 commitments, looking at a number of other ones. They have a database where they actually track this, so it makes that tracking a lot easier for us to look at when we ask for information. You have with Gavin Christensen one of the longer track records in the New Mexico program. He's been looking at New Mexico investments for well over 10 years and a former resident of New Mexico as well. And I think the second thing I want to mention with Kickstart that I like to see is they continue to innovate and try to find new ways to find investment ideas. And we're seeing that with Campus Founders Fund, which they're going to speak more about. But that's an innovative way that we're seeing them try to find new deals within New Mexico and other states in the region. So with that, I'll turn it over to Devin.
Yeah. Thank you. Well, it's really a pleasure to be here in New Mexico and have a great breakfast burrito this morning. It was lovely. So I'm Gavin Christensen's Dalton Wright. I'll be able to start with just our history, which has a lot to do with New Mexico. So in 2007, I moved my family from Chicago, we talked about Chicago, here to New Mexico, live in the East Mountains, take over the office for a venture fund that was focused on New Mexico. And At the time, my wife was in botany, so I had to take pictures of the East Mountains and say, hey, there is some green here. It's going to be, and we fell in love with New Mexico. It was a great time for us. We were for 5 years. And this is where we started Kickstart. And at the time, you know, everything was rosy. I was really excited about, clean technologies. Great recession hit. It was a tough time to launch a venture fund. It actually took us like 2.5 years to raise $8 million. And at the time, I spent time all over the West looking, hey, where should we launch this Kickstart, which is going to be something that can really help entrepreneurs in the West, kind of be like the coast, have capital, have resources, have network. It was a vision, just like any entrepreneurial vision, and there wasn't a lot of believers back then. What's really exciting is we're here today. We're on our 5th fund. And we've proven a lot. We still have a lot to prove, but New Mexico has been a really interesting part of the story. I was here doing that. We did some great deals in New Mexico over the years. We did find that Utah had some things that were critical mass, in terms of the number of entrepreneurs, the capital that drew us there to really be the center of Kickstart by New Mexico has really been an important part of the story throughout. And we're excited that some of the things that we've seen in Utah are happening in New Mexico. And when it came time for our 4th fund, we had a dialogue going with the SIC since the 1st fund. And thought that was the right time, that we had a big enough portfolio, that some of the things that we'd done in Utah would benefit what was going on in New Mexico. We were excited to invest. We actually did some New Mexico deals before Fund 4, but to be more active in doing larger checks in New Mexico. So definitely want to say thank you for the commitment to our 4th fund. I think it's been a great partnership on both sides. And with Fund 5, we're excited to do more. In terms of we've increased the staffing of our team, and we've got specifically, we're going to roll out Campus Founders Fund in New Mexico and other places. We have Dalton talk a little about that, but we're excited about what we see here. And I think there's some challenges, but I think what we've learned is that if you want to be a successful seed fund, you can't just focus on the deals you invest in. You have to lift an entire community. So you have to care deeply about the communities you invest in, and you have to partner deeply with the key ecosystem participants. And we have that in New Mexico. We have people who care deeply. You're part of that. And I think with that kind of vision, it's going to take a while, but we'll get there. So I'm excited about that. Dalton, you want to talk about Campus Founders Fund?
Sure, yeah, I'm happy to do that. So Campus Founders Fund is a program that we launched about 4 years ago, and really the intent was to raise the next generation of venture capitalists and entrepreneurs. Venture capital can be a little bit of an opaque industry to get into. It tends to be very homogenous in terms of the types of people that you see in the industry, and we wanted to change that. So we opened up a program where we invited students from universities in Utah, so BYU, University of Utah, Utah State, and others to form a student investment committee. And we taught them the venture capital investment process, the due diligence process, and we empowered them to go out and find their fellow students who were launching companies, aspiring entrepreneurs. As you know, there are founders out there who dropped out of college and created billion-dollar companies. We have them in our state, and we wanted to identify those people early. We wanted to provide them support and celebrate them before it was obvious that they were going to go on to be heroes of our community. So since then, we've invested around $500,000 in student-led startups. We've trained over 30 students in the venture capital process. A lot of those students have gone on to either start companies, join portfolio companies, they've joined other firms. This is a really elite program where students who go through Campus Founders Fund are getting the most coveted jobs that any students are looking for on campus. And on top of that, it's turned into a really great feeder program for our investment strategy. So we have backed over 25 companies at this point, launched by students who are out of school. And some of those companies are now worth several $1 million. We've had, the most successful one is valued at over $20 million at this point. When we first invested, it was probably, worth $100,000, right? Employ many people at this point. It's just a program that's really working. So this isn't a charity. There's a lot of, there is some altruism attached to it. I'd characterize it more as kind of a long-term focus on ecosystem building. But we've had immediate investment returns from it. So these are turning into opportunities that allow us to put more capital to work. Because with the funds we manage, it doesn't make a lot of sense to write 20K checks at a time unless you're able to write $1 million seed round, and that's exactly what we're doing. So we're seeding these companies, we're training a younger generation, and we're investing with them as they grow.
The reason for Campus Founders Fund is that the ecosystem building we've done in Utah and other places, so much of the key are the young people, the students. You've got some great institutions here, we'd love to see, what we found with Campus Founders Fund is that we decided, I think it was on a Friday to do it. It was actually Dalton's idea. We launched it on the Monday, and we didn't ask permission of any of the universities. We just launched it. We found that we'd be so much more effective if we were on campus, but not controlled by campus at all. And giving these students an amazing experience. 50% are women who maybe weren't thinking about this industry, and to give that opportunity to fund other students and do that on very fair terms. So we're excited to launch that in New Mexico. We'll be partnering with folks on the ground here to do that. We think that, look, New Mexico is known for lab scientists, great technology, amazing, research and development. A lot of what's going to get New Mexico to the next level are the great entrepreneurs, and a lot of those are going to be young people that are thinking about school, they're in school, they're just out of school, and so really giving those folks an elite opportunity to be venture capitalists when they didn't think about it, or to be funded by their peers, we think could be a really interesting opportunity. One other thing I'll mention, a big part of, we have over 100 companies now. Many of the companies we funded, it's kind of wild, but many companies we funded had no employees when we funded them, and now they have hundreds, even 1,000 employees, if you can believe that. And a lot of what allows us as a small team to help all these companies is we've created a community. Kickstart is just not 10 investment professionals. We believe it's a movement. It's a bunch of fellow travelers who believe in the same thing, and we call that Kickstart Collective. And we try to involve our New Mexico companies in that broader community of folks in Utah, in Colorado. And one example of that here in New Mexico is our company AdWalt, which is an amazing little company. Some of you may be on the AdWalt app, getting paid to watch ads. And they needed a CTO. They needed to rebuild their technology. And part of what we do is we help companies recruit key talent. And amazingly, we were able to find one of the best CTOs in our entire portfolio right here in New Mexico. Happened to be living in Galisteo. He's like, yeah, I'm here. I'm looking to, do something interesting. I retired too early. Let me see if I can help out. And so there is talent all over New Mexico, and part of that is activating that. Part of it is drawing more to the state, and that's kind of what we've done in Utah and other places. We're excited to keep doing that in New Mexico. So, you have the materials on us. Happy to take any questions, but that's basically our story. Happy to be back.
Okay, thank you. So, council, I have a question. Yes, Susan?
Thank you, Mr. Chairman. When I was reading your information, two things caught my eye quickly, which is your fee structure and on page 131, your loss ratios. And most of that came from Richard, but I like what you're saying, and I like the fact that you want to promote New Mexico, because we've all want economic growth here. Can you kind of address those two?
Sure.
We used to have one meal.
Yeah, so fee structure, we're standard. In fact, I would say we're on the investor favorable, meaning your side of the table, favorable side of the fee structure. We're 2 and 20 in European waterfall. That's actually pretty unusual for a seed fund. But we're a critical mass now in terms of the assets under management. So, and we have 10 people on our team. So you can imagine we're definitely in this game to have carried interest, which is the profits on the fund, and it takes a while to venture. Given. So I think fee side, it's, we're definitely on the LP side of normal. On loss ratios, it's interesting. We have a number of institutional investors in addition to yourselves. And one of the things that some of the really sophisticated LPs, push on is to say, are you taking enough risk? We don't have very high loss ratios for a seed fund. I would say, not to get into public meeting numbers, but they're low. In fact, they're so low that, and part of that is the nature of the entrepreneurs we back. Entrepreneurs in New Mexico and Utah are deeply committed to what they're doing. And so they tend to stay in the fight much longer. Now, we don't always keep funding if they're not having success, but we stay in the fight with them and support them. And that's part of our brand. We believe that the reason that we're able to get access to the best companies the way we are, and we're known as the most active investor in the Mountain West, Utah and the Mountain West, and is because it's how we treat the top companies we invest in, but it's also how we treat the companies that maybe aren't doing as well. Those folks matter a lot. There's a lot of luck in this. So I would say from a loss ratio standpoint, you would expect maybe 50% losses in seed. We don't have that, as you know. And that's just kind of who we are.
Also add that we recognize losses earlier in this game. So, there are a lot of, as companies are ramping up, the companies that are going to struggle now, you realize that earlier. The companies that are really working, we don't want to exit those positions for a long time. And so we hold for the long run when we identify a winner. And we try to recycle companies and get capital back to work in the portfolio when companies aren't working.
One thing about the fee structure that's somewhat unusual for the venture capital funds is that there is a preferred return in the distribution waterfall. And the preferred return, think of it as kind of a clock ticking, you know, and the hurdle increasing over time if there's no realizations. That's one of the issues with venture capital right now is the rate of realizations. And we highlighted that as one of the risks with Kickstart, the lack of realizations. We'd like to see more over the next few years. But having that preferred return there helps align the team with your interests of getting realizations because they want to get over that hurdle to get that carried interest.
Louis, I think you have a question.
Yeah, really, David, I guess the question really goes to you because it seems like this fund is a lower amount in terms of our investment, has a lower return. In general, I think it has higher fees, but it seems the focus also is on job creation, primarily in the Utah and maybe other areas, and they have, you know, put some investment into New Mexico. So what is the real reason, or the motive that the SIC would have to invest in this company would seem to be hopefully getting job creation in New Mexico. So if that's the goal, where are we booking this investment? Are we booking this in the ETIs? Or are we booking it in the, where are we booking it?
This is an investment.
Private equity?
This commitment will go into the Mexico private equity program, which is part of the ETIs. The rationale behind bringing this firm into the New Mexico program is we feel like they have specific expertise, particularly in what they're investing in. We think they've demonstrated that in Utah, and we think that that can help the ecosystem here. In terms of adding jobs, a lot of times what you're trying to do at seed is you're trying to start these companies, and you need to sort of maximize your chances of success in a somewhat lower probability area. You know, we all know, I'm familiar with the percentage of startups that fail. So it's very, very important what kind of help and advice and connections that you get. And we feel like a firm like Kickstart, through their first 4 funds and also in this fund, would be of benefit in doing that. And they have also, you know, a not so insignificant point is we do look at what they've already done. All the comments I've just made, you know, they could be theoretically helpful, but if they are not committing to New Mexico companies, then it really doesn't move the needle for us. And you know, like I said, with AdWallet, Trilumina, and Robotic Skies, 3 different companies, potentially more investment to come in those 3, not to mention potential future companies. You know, we feel like they have something significant to add based on their perspective of investing in different areas of the mountain.
Thank you.
Can I just add a quick response? Just on returns, without speaking actual numbers, I think it's, you know, we have work to do on realizations, which is innate, which is sort of systemic with where we invest in the capital spectrum. From a return standpoint, we are clearly aiming for top quartile in our benchmark returns, which should be just about every return category, frankly. So, we don't see ourselves as compromising returns at all. That's one of the reasons we waited until Fund 4 to make sure that we had the track record, but also the overall portfolio where, frankly, you guys invest in us and know that you are taking advantage of the fact that we are the leading seed fund in probably the top 4 venture market in the U.S. right now. And so I don't think there's a compromise on returns. Speaking of Utah, on returns with us.
David, how did you decide the investment size for this particular?
So that was a sort of extensive discussion amongst staff and consultants. We are, we're certainly aware of the language in the statute and the investment, the cost to invest. So a lot of that is trying to be appropriately sized for what we think they'll be able to do in the state, given the fact that Utah takes up, roughly 2/3 of their investments. But again, we think that they can provide something meaningful to New Mexico. And so we have a high degree of confidence that that's what they can achieve.
So under the cause to invest, so maybe explain to Nicholas how that actually works.
Sure. So what we do with funds that we invest in that perhaps are not based here and don't put all of their money in New Mexico, this kind of applies blanket, but it's less relevant for everybody that's just investing in New Mexico only companies. So for a Kickstart, for a Phoenix, or some of the other funds that we brought, they have lots of LPs, they're investing over a region. So what we would like is for our commitment size to be put into New Mexico, either on a standalone basis or what we call a cause to invest, which means maybe Kickstart or somebody else puts together a syndicate of people to have that money invested in New Mexico. So we feel like we're getting, that maximum bang for the buck. We can't, and we wouldn't want to force regional managers or national managers that are higher performing to conform to a very specific New Mexico standard. They wouldn't agree to it anyway. But what we can do is we can participate in them while still making sure that our money is working for New Mexico and New Mexico companies. So, for instance, a $7.5 million commitment, we would expect out of their whole fund that they can invest or cause to invest at least $7.5 million, hopefully more.
To give you the specifics on Fund 4 too, Fund 4 is currently invested $3.5 million into New Mexico, but the rounds that Kickstart led or co-led brought in additional capital, so the total is around $10 million.
Yeah, so you're saying that 10 million is in New Mexico?
Yeah, and
The
three New Mexico
initial,
companies.
you did an
And that's-
initial $7.4 million.
Yeah,
Into the fund, yeah, so your $7.4 million commitment is in the fund. It's diversified across a number of companies, including the three companies in New Mexico. But then the fund itself invested $3.5 million in New Mexico companies, and then the rounds that Kickstart led or co-led brought in additional capital, so the total is 10. But that's just the rounds they led or co-led. Those New Mexico companies have actually raised over $25 million.
Mr. Chair, I'd like to just point out, or just make a comment here. You mentioned NTX Bio, that you're going to be investing in, correct?
Already invested.
Yep. Yeah, that you've already invested in, things like that. I'm very familiar with that group. They came from Los Alamos National Labs and actually set up at Santa Fe Community College on campus, and they're partnering with us to actually educate and train some of our associates level students, and it's remarkable. We've just seen in the past couple of years them growing, and I know that they won't stay a part of SSCC for much longer, but it's remarkable, and that company is in biosciences, and I think that's an area that really is something that is promising to New Mexico. So I really do appreciate, that's a great company, and I think it's going to go really far in New Mexico.
Great, thank you. Useful comments, and any other comments? We'll do that, I think.
Based on the recommendations of the Council Investment Committee, New Mexico Private Equity Advisor, Mercer, SIC staff and general fiduciary oversight, RBK, I move that the State Investment Council approve a commitment of up to $7.5 million to Kickstart Seed Fund 5 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Any other comment? Yes,
Yeah,
sir.
Mr. Chair, I'm going to recuse myself from this vote. I'm very, very familiar with Kickstart. I'm very familiar with the terrific involvement they've had with a significant number of entrepreneurial situations here in New Mexico. The CNM Ingenuity Fund is also a fellow investor or an additional investor in one of the companies in which they've invested. So I'll sit out this one for this particular purpose, just to make sure there's no perception of any collusion or anything.
Not conflict, not collusion. Come on, Harold.
Thank you, Lord.
All
I'm glad you gave your endorsement prior to.
Gotta be slick, dude.
He's kind of sitting out, maybe. That's good. All right, any other comments or questions? Okay. All those in favor, please say aye. Any opposed?
I'm gonna step with my out there. I appreciate you guys, and I wish you nothing but success.
Thank you. Is that a no? I didn't hear that.
That's a no.
A no, okay. All right, so we almost unanimously passed, but one abstention and one no, and several council members missing. So thank you very much, bring us a lot of money.
Good luck.
Thank you.
Fixed Bart? You still here, Bart?
Still
So today we have the fixed income structure study. We try to do structure studies within all the different asset classes every 3 years. I'm Bart Stuckey, the director of the fixed income. And with a structure study, what we try to do is discuss the strategy and structure within an asset class. On page 2, which is 202 in diligent, are the recommendations that we have. And so page 2 is a preview of what we'll be asking for at the end of this presentation. The major recommendation is shift of the Shankman short-term high yield fund from the core portfolio to the non-core portfolio. We think this is a much better match with the benchmarks. Shankman is a short-term high-yield manager, and right now it's being benchmarked against a long-duration, high-quality index. It will also provide more, it's a public market strategy, so it will provide more liquidity within the non-core fixed income portfolio, which has a lot of other funds that are set up more in a private equity structure where the lack of liquidity due to the long-term nature of those funds. Also on this page, we're recommending, this is a more minor technical change, but we're changing the targets for our sub-strategies within the core fixed income portfolio to ranges from single point estimates. And this is consistent with other asset classes and other targets within fixed income. And then also fairly minor, we want to change the name of the unconstrained subsector and make that more inclusive and call it public market strategies, and proposing moving Shankman into that portion of the portfolio. So I'm happy to talk about anything in this structure study, but I'm going to jump ahead to page 5, which would be 205 in diligent. And here we look at the portfolio on the sub-strategy, sub-sector strategy level. The comments I would make on the top portion of this page, the core fixed income portfolio, if you look at the current allocation, it reflects a more conservative approach than our long-term targets, which reflects more of the strategy that we're taking on the overall portfolio these days. And then my comments on the bottom portion, you'll see the current allocation versus the allocation from the previous structure study, and that really reflects a maturing of this portfolio. The non-core portfolio is still in the early stages of being built out, but you'll see from a little over 2 years ago where most of the allocation was in the unconstrained strategy and a couple funds in structured credit, that has been diversified into other sub-sector strategies of structured credit, lending strategies, and distressed and other. And so that restructuring takes place on the micro level, you can see as the funds that we're bringing forward to this table over the last 2 or 3 years, that's on page 6. So a lot of these names should be familiar. So these are replacing funds that we've redeemed, which we're showing on page 7, where we've had fairly significant redemptions over the last 2 or 3 years, over $1 billion in legacy hedge funds, the unconstrained portfolios, and then bank loans. And we're moving these into the funds that you see on page 6, which are more of the, there's been an explosion in private credit over the last, especially 5 years, and there's a lot more opportunities, a lot more better opportunities than we had 10 years ago. So what you're seeing in the restructuring is a shifting from the types of funds that were available, say 10 years ago, to what we have now available to us over the last 5 years or so. And then I'm going to skip ahead to page 10, and on page 8 and 9 you'll find all the manager mandates that we have within the fund. So as I mentioned before, the major change we're making is shifting the Shankman high yield portfolio from core to non-core. On page 10 is a report that RBK ran for us, and this shows the portfolio characteristics of the core fixed income portfolio. And what I would point out is in the shaded box rectangle on the top, is there was a pretty big duration mismatch between our portfolio and the benchmark, which in a year like 2019 provided a bit of a headwind. In 2019, the 10-year Treasury went from 270 to 180, so longer duration portfolios would benefit in that kind of environment. We had a shorter duration portfolio. When you see the December numbers, we did make up that difference in some nice manager performance. So the core portfolio will, on an annual basis, outperform, but that was in spite of a headwind with a duration mismatch. So on page 11, RBK ran the portfolio, what it would look like with removing the Shankman portfolio from the core portfolio. And you'll see a much tighter alignment there on the duration. So any movements in interest rates in the future will not affect performance within the core portfolio. And those are my main comments. On page 12, you see all the recommendations that we're asking you to vote on today, but I'm happy to answer any questions within the study or fixed income portfolio in general.
Are there any comments or questions? I think it's a very thorough paper and makes sense, I think. Yes.
Thank you, Mr. Chair. When I got to your slide 11, my first thought was...
What page are you on?
Slide 11. Okay.
Slide 11, okay.
Were you going to be proposing a benchmark change in the future?
For the core portfolio? No, the benchmark will stay the same.
Thanks.
Yes.
Mr. Chair, with respect to this kind of ongoing inverted yield curve, how have you factored that into this? Is that informing some of the duration strategy that you're looking at here?
It will. This strategy will neutralize any changes. So whether the yield curve continues to invert or become more inverted, or if we were to move towards a situation that they're seeing in Europe or Japan where you have negative rates, this will neutralize that effect. Or if it goes the other way, for whatever reason, inflation enters the scenario and the yield curve becomes steeper, that will be neutralized with this change.
Mr. Chairman?
Relative to the benchmark.
Just want to comment, probably the two biggest risks or two biggest things we face in fixed income portfolio are very low rates create a lot of leverage to changes in rates. So here we sit at 160 or so on the 10-year today. A move to 3%, just a small move, would just absolutely kill long bonds. Same thing, if we're sitting here at 160 and we go to 110, it's a very big gain. So small changes in interest rates, with interest rates this low, create a lot of leverage to changes in interest rates. So what Bart's trying to do is neutralize the impact of that on the portfolio with this change. The other big risk we have is the corporate bond market. We've talked about that in this room a lot before. It's just huge now relative to what it was. It's more than double the size of what it was in 2007. The portion of the market, just one notch from jump, is 4 times as big as it was in 2007. So the corporate bond market has a lot of risk in it right now, and we've tried to neutralize some of that also.
All right.
Well, Vince, when you look at this stuff and everything, and I get curious, how do you factor politics into this damn thing? I mean, you turn around and you look at the difference between Trump and Elizabeth Warren, and my God, it's enough to scare the hell out of anybody. And I mean, about where to go, and you look about who's where, and who are we going to end up with choices between?
I'm already terrified.
I mean, you could be, between a pro-business and somebody who's going to be anti-business, and it can all go within a couple of points. I mean,
There's two things we can do, and we've done both. Come down the risk curve and diversify. And those two things are linked. So we primarily come down the risk curve by diversifying the portfolio. That's about all we can do in a volatile, or potentially volatile environment.
there's probably the two most diverse things in the whole world.
What I would say within this portfolio is there are no bets either way. We're not making a bet that we're
no pro or con.
No pro or con. It's still to whichever way that works out. It's still to perform.
Okay. Other comments or questions? Linda.
Based on the recommendations of the Council Investment Committee, SIC staff, and general fiduciary oversight of RVK, I move that the State Investment Council approve the fixed income portfolio recommendations as discussed, reviewed, and memorialized by the Council today.
Second.
Any comment? Yes, please.
Well, I just, wanted to have some fun, but I noticed on the non-core fixed income, under the distressed, you have Bain Capital, and I was wondering if that had anything to do with the Romney-Trump issue.
Yeah,
Is it why he's distressed? Anyway.
No, it's just a type of investment.
Gotta have fun.
All right, all in favor?
Aye.
Aye. Any opposed? So unanimously approved. Bart, kind of a swan song. Thank you for doing this.
Thank you very much.
Our last item under investment matters is the investment policy statement, and that's basically a cleanup and updating, and hopefully everybody was able to get through the extensive red line, and I don't know that there's a lot of discussion, but Vince, please.
Yeah, thanks, Mr. Chair. I'll tag team with Marcia on this one. You saw this last month. You saw most of these changes, or all these changes last month. You sent us back on one issue in particular. That's on page 230 in diligent. And we're suggesting the word should with respect to the diligent steps that you see there. You sent us back to consider, should we make that will to tie us closer to that list of things. We had extensive discussion on it, actually, and what we came up with is the difference, primarily the difference in searching for publicly traded managers and searching for private managers can create a skew one way or the other, depending on what kind of manager we're looking for, that potentially could get us sideways with that list. So for instance, if we were looking for a private manager, we very much would focus on on-site due diligence, number 8. Very much, visiting those managers and talking with those folks. On the public side, we would be more oriented to the quantitative screens. So it's unlikely if we were looking for, say, a multi-family manager like you just voted for today, that we would do some sort of quantitative screen. There's only a few out there that can do the job. Same thing even in the public markets. If we were looking for a REIT manager or an MLP manager, there's so few managers in the markets that it may not make sense to do a quantitative screen. So we'd rather leave the word should. It's your policy. You can have what you want in there. But we continue to recommend that we use the word should there. And then Marcia, was there anything else that we?
No, I just will say that I've been working with another client on revising their policy, and involved in that discussion. All the meetings has been their fiduciary council and their internal council, and they made me take all wills out, put shoulds in, because they felt it was for that very reason.
So that's
Otherwise, the changes that you see in there are things you reviewed last month, and Peter described it just right. It's a cleanup effort on the policy to kind of catch everything here at once.
All right, anybody, yes.
I have 2 recommendations, and they're just consistency items. One is for the investment committee charter. It's on our page 247. It's part of this.
Investment committee charter?
It's attached as part.
I would like to keep them separate and talk about the investment.
It's an addendum to now. We had added it to the appendix.
It's an addendum?
It's an appendix.
I guess I didn't notice that. All right, please go ahead.
Okay. The first is that it's called the investment committee and referred to as the IC. We refer to it as the CIC everywhere else. So I mean that's just a little cleanup item. And the other is the next page, where we talk about conflict of interest. And it's the first paragraph there. I wonder if we just should adopt the same language for conflict of interest as in the audit committee charter. That's on our page 410 in our materials today. And it's just slightly different language, and I think we ought to just go ahead and adopt the same language for conflict on committees. That's it.
Just clarification, because we have the SIC, which is State Investment Council, and you're suggesting that the investment committee is the...
Oh, I'm sorry, CIC.
CIC, okay, I thought you said that. The
If
CIC.
I did, I was mistaken.
Okay. No, I just maybe didn't hear that.
CIC.
That's fine, CIC, okay.
Yeah. Okay. Are those changes acceptable to everybody? Yeah.
With respect to her motion?
Yes.
I have some questions with the other document, but not with her motion. Okay.
So Linda has made some 2 wording suggestions. I'm asking if those are acceptable to the group, and then we can, okay. So let's presume those get added or changed. And now, Lee, you had another set of questions.
Right, and maybe towards Steve, because my underlying concern still gets around what the role of the council is versus the role of the SIO, the investment committee, and staff. So rather than my perception of what this says, what's the practicality of those different roles in this document? In terms of decision making.
Vince, why don't you take it? I think Vince is probably the best one.
I just want to make sure I'm clear.
Yeah, I think generally, the process by which we bring in investments is well defined in here. It's at the office. The office, does a diligence on specific investments and makes a decision. Yes, we think this should come in the portfolio. That goes to the CIC. CIC makes a recommendation to the council, and then the council votes as to whether the investment's appropriate. That process is pretty well defined in here. If there's
the language, we did not really change very much under the roles and responsibilities. We moved it around some. I'm sorry, my hearing is, if I'm screaming, I apologize. I don't have a hearing right now, so I apologize. But we changed around some language, but the responsibilities of the council is still setting the strategic direction, while staff, through the CIO, implements what the council has set. And that's
So really the change I'm perceiving is that the council decisions will be limited to the overall strategic plan or investment plan, and staff and the CIC will determine the actual investment. For instance, like the ones we approved today, I sense, given this document, that's not going to, those presentations and those decisions won't be made by the council, they'll be made.
Are you talking, but I sense you're talking a little bit more about the consent agenda that's coming up?
No. If we go to page 223 to page 11.
Okay, thank you.
My concern is on subsection C, where it says the CIO has responsibility to direct and implement all decisions required to achieve the council's approved strategic investment direction. So I'm perceiving that the only thing that the council's going to do is to approve the strategic investment direction or decisions, and that the staff, with the involvement perhaps of the CIC, would then make the individual investment decisions. And I think that's the troubling part for me as to what decisions are being taken from the council.
I don't believe that there's, I mean, you have the discussion with governance on the consent agenda, but this was more clarification of the way things are being done. You set the allocation, you set the ranges, and staff, throughout here, it always said staff was going to implement the council's direction. We really haven't taken anything away. We actually, in one place, it wasn't clear about transition managers. It wasn't clear that you select the transition managers, the pool. So we made that very clear that the council selects the pool, staff just implements a transition using what you've already selected. So there's clarification throughout here that is really putting in play, just putting in the document the way things are being done now.
If I could just, I want to ask these questions a little bit differently, but the same thing, I think, and that is, are you confident that this language continues the process we've been using, which is staff comes up with the idea of an investment. In other words, they source out following the plan. And that comes to this investment committee, which then makes a recommendation. That recommendation comes to the council, and we do it just like we did today, and it's approved or disapproved. Does anything in this language change any of that? You're confident that it doesn't?
I agree with Marcia, and on page 230, it's that same page where we had the language of should. Steps 9 and 10 to our process are exactly what you described, that it comes to the CIC and then the CIC recommends it. So that's hard-coded in your policy right now on that page.
And although it says should there, that is something that will happen.
Well, I realize too that after we make a decision, then, really Evan's team gets involved to make sure that everything's as it should be. So, I appreciate that, but I just want to make sure the decisions remain for the...
As, with respect to this document, there'll be a discussion in a few minutes on something else.
As we entered the review of the policy, there was no mandate or intention to alter or change the process. Really was saying, how can we better reflect what's already taking place? That's how we approach the review. So there's no change.
Thank you very much. Any other questions? Are we ready for a vote? Mike.
Well, do we need to deal with the proposed amendment or editing that Linda has proposed for us?
I guess I thought I did, but I guess we need to vote on it, is that what you're
I
asking?
think we need to
Vote on the
approve that.
amendments, okay. All in favor of the amendments that Linda suggested, the two wording amendments Linda suggested, please signify by saying aye. Aye, okay. That passes unanimously. And now let's vote the policy as amended and by Linda's recommendations and as rewritten slightly. All in favor of approving the policy?
Do we have to do a second of this?
I thought
A
we
motion
did,
and a
okay.
second?
We have a second.
Second.
Carol. Okay. All in favor?
Aye.
Aye. Any opposed? All right, so unanimously that has been approved. Okay,
We'll make the changes and
right, thank you, appreciate that. And now, Brad, your report was useful.
I'll try to be brief, Peter. I'm on page 249. I have the diligent material. Just wanted to make a couple of points. On my talking points, item number 4, I did note here, because I've received questions on this, figured I'd mention it. We did wire to the SBIC $57.7 million on January 6th. This wire was only completed after confirming that there was going to be no changes to our just completed audit report. The water amount represent a true up of the prior 1% plus the additional 2%. So just wanted everyone to know that transfer has been made. And then,
Will most of that money come back to us as an agency?
Peter, that's a good question. A good part of that money will come back to us. The SBIC does have accounts with us, and until they actually deploy the money, most of it comes back. So
For investment purposes.
For investment purposes. So that's just until they get up to speed on what they're actually going to do with the additional 1%.
Brent, is the number 5, is that the money, is that the original dollar amount in the tax stabilization fund? I thought this happened last July.
No, that's, Harold, that's a good point, and that's the reason I bring it up. That's additional monies coming over.
That's additional.
From the DFA.
So this should be about $1.2 billion-ish
Yes.
now? Oh, that's great. I mean, that's terrific. I was looking at that and I'm thinking, because that's real close to what that first number was, isn't it?
It is.
Yeah, yeah.
It was over 500
Yeah,
million.
yeah, that's great news right there.
Yeah, we were communicating as, I think yesterday, as a matter of fact, we're just trying to tie down the amount that we're expecting over the next couple of days.
That's great. That's terrific.
And you can't easily deploy that much money, $560 million. So we try to really monitor what's going on as to the timing of it coming across. And I know your office has been involved as well.
Well, and this is a new number for me, because last week I was telling the legislators it was 571 million. So thank you for updating me.
I have one more question on the SBIC money.
Yes.
Is it time maybe for the SBIC to make a report to the SIC and let us know what they think, and are they able to deploy 2%? I mean, if they had us sitting on 1%, some of that 1%, are they going to do 2%?
I think that's a great idea. We can talk about it, Steve, and get them on the schedule to come in and do that.
And confirm that they're still using the same strategy, loan strategy that they have.
Right.
We will.
And that they haven't wandered into private equity again.
Yeah.
Okay.
If I may, Brent.
Sure.
The SBIC has told us that they can responsibly deploy the additional money, that it's going to take them a while. But I think it will be good to have them come report to us, so we'll ask them to do that.
Yeah.
And then just a couple of items I'd like to point out, if I may. On page 252 of the diligent material is a budget summary for the 6 months ended December. If you go to the far right-hand column of that report, you can see that at this point in time, we're well within our budget. Again, I would point out this information's as of the end of December, so things can change, but we are anticipating through the end of the fiscal year to have ample budget. I'm not going to go over the detail, but for each of those categories, the 2, the 3, and the 400s, there's supplementary material after this page that you can see the actual category totals. And then I did want to point out, just because we have a new member, and I think it's important to focus on this report on a regular basis. On page 257 is the IHR. It's an index of all the pages. You'll note relative to prior months, this report is a lot thicker than normal. And you might say, well, why is this report thicker than last month? Remember that December is not only the month end, but it's a quarter end. And I just wanted to, on this index, if you look at you know, the way things are listed out, page 2, page 3, page 4, 5, 6, and 7, those give you the individual snapshots of the investments for the funds that the State Investment Council invests with R4. And then if you go on to, let's see here, 259, you can see the land grant permanent fund, and then thumb through severance tax permanent fund. You'll note on this report that the tax stabilization reserve fund is within the investment holdings report. The audit that I'll be focusing on in a few minutes is not included there. Just remember that the TSR fund is effective July 1st of this fiscal year, so it's not part of our most recent audit. So I wanted to point that out. And then if you go to page 320, which is the notes for the investment holdings report, I just wanted to point out on the first bullet, I know the land commissioner is always interested in this. She's aware of the numbers, but I wanted to point out that the contribution from the state land office for December was over $95 million. That's a new high water mark on inflows for a month. I think Charlie said that it surpasses prior by at least $5 million. For month-to-month comparison purposes, it's about $10 million more than it was last month. Relative to the same month in the prior year, it's about $20 million more than it's been. So good job, and hopefully those inflows are going to continue.
Fred, the Interstate Commission gave us $5 million.
Yes, they're one of our clients, Peter, for our newest member. We not only manage money for the land grant, the severance tax, and the other funds, but we have clients from around the state that actually comes in and invest in our pools. And we not only get money in, but periodically clients request to take money out. And we do that for them. And as someone pointed out earlier, I think it was Mateus, that we continue to attract more clients and more monies, which I think is a reflection of the good job that we do.
Yeah, there's just
the investment side.
A small typo there that is irrelevant, and also a very small issue, but why do we use the term contribution for a client? It's really not a contribution.
Yeah,
I don't know if there's a better term. But
it's funny you should bring that up, because Steve and I were just discussing that this week. So
they're placing money with us as an agency.
I would say probably a better term would be investing and redeeming investing, and that might be something that we
anyway. It's minor.
Okay, and then on page 321, I try to include this every single month. This is the total of the land grant permanent fund divided by beneficiary. So you can see we get inquiries, especially this time of the year, regarding how big is the common schools relative to the total. If you look in that percentage of funds, you can see that the common schools is about 85% of the land grant permanent fund as of the end of December. Those percentages change a little bit based upon the inflows that come from the land office, but generally it's fairly consistent from month to month. And then finally, I wanted to point out for everyone, and I will only spend a couple of minutes on this. I have included the financial audit for fiscal year 19. It begins on page 322. I just want to, if you go to page 323, you can see kind of an index of the pages within the report. Just a couple of things. The report of the internal, or the report of the independent auditors is on page 2 to 4. If you go down to the bottom, you can also see the page 72 to 73 includes a report on the internal controls. Those two reports, I would suggest, if you haven't already, spend a little bit of time looking at those. Those are probably the most important part of what the auditors do. And then also I wanted to point out, as far as findings are concerned, you can see there's no findings if you go to page 75 and 76. There were no findings this year or the prior year. And I also wanted to tell our newest member, if you have any questions on anything related to the audit report, and this is for all members, please feel free to pick up a phone or send me an email. I'm happy to talk to you about any questions that you have.
Brett, we ought to mention that Carrie is preparing the orientation materials for Nick, and we'll be inviting him to meet with our management group to go through those, and that would be a good time for him to ask.
Yes, absolutely. And you also, Steve, I wanted to touch upon one other thing that you asked about, and I know the land commissioner asked me about this morning when we first saw each other. Our request for fiscal year 21, as far as our appropriation, was $58.4 million. That's about 4.5% less than the prior year. There was slight adjustments to it. We got about 95 or 99.5% of everything requested. There was some small payroll adjustments that they make. Typically, if you have vacancies, it's hard to get everything that you request as far as payroll is concerned, because they do work in a vacancy factor. So they adjusted our budget request by about $260,000. Other than that, I believe it was the executive recommendation that was approved between the two. LFC was maybe a little bit higher, but wasn't substantially different between the two recommendations. And then Steve also mentioned earlier that we just recently hired a new financial analyst. We promoted one of our financial analysts, Tu Sanchez, to financial coordinator. This financial analyst position took us about 6 months to fill. We got quite a few applicants. We're very selective in the type of people we hire based upon what we do. We're very happy to have Andrea Cohen start with us earlier this month, and we truly hope that she's with us a long time. I think she's going to be a great employee, and that's the end of my report.
Very good. Thank you, Brett.
So I just have one quick question. When I'm looking at page 321, which is the client list, are all of the clients listed on that, in that line? Isn't San Juan College? Am I looking at the wrong thing?
Yeah, you are.
Okay.
Let me clarify for you. On page 321, this is a schedule of the beneficiaries for the land grant permanent funds. If you look over at the far right column, the $19.724 billion, that's the amount that's at in the land grant permanent fund as of the end of December. To your point, if you go to page, get there real quick. If you go to page I guess it's 266.
I'm with you. You know what, I missed, when I looked, I didn't see that summarized like you do sometimes. I've seen it summarized. That's my.
Page 266 lists all the clients and
That's
their
all.
respective investments in the pools.
Thanks, I thought it was going nuts, probably am.
Well, if I can, I just want to clarify for Harold
Yes, sir.
and Senator Jennings that UNM gets almost 4 times the amount of beneficiary money as New Mexico State, and New Mexico Tech gets almost 8%, 8 times more. So
Probably talks a little bit about results.
I don't know. What did you call your team a while ago? Never mind. We're sidetracked. We're out in the weeds.
Well, you're still in that, you.
Yeah.
Thank you very much.
Yeah, thank you for that.
Let's move to the governance. Yes, of course.
We have hard copies of the audit for any of you who would like to have the hard copy. If you'll let Brent know, he's happy to give you one.
Just want to say congratulations, Brent, on another really clean bill.
Thank you, I appreciate that.
Terrific.
I have said this before, I have a great staff, and, you know, just the focus on detail, if I didn't have that, my job would be so much harder, and I really appreciate the jobs that they do. Thank you.
Mr. Chair, members of the committee, if you please turn your attention to page 322 in the online agenda. I'd like to just quickly take you through a few items. The committee met on January 14th, reconvened, I should say. I think this is a committee that has been in existence and has a started meeting again. And the first order of business, not the most important item of business, but I was elected as the chair of that committee. So
Most important.
just FYI, I'm going to tell you that. But the more important items, and you can kind of see here on this this page here. So one of the action items that this committee discussed is the rotation of the vice chair of this council. And so with discussion on that, and based on the importance of the state land office and as a major stakeholder, all committee members were in favor of recommending Commissioner Garcia Richards to be the vice chair for the state investment council. And so with that, I would like to open it up to full council. That is a recommendation coming from our governance committee. And before I do that, I want to actually thank Mr. Peter Frank for his wonderful years of service, 7 years serving as vice chair of this council.
Thank you. Just learning the job. I think that's a voting item, so do we have a, so I guess I'm all right. I'm going to read the proposal. Based on the recommendations of the Governance Committee, I move that the State Investment Council approve the appointment of Commissioner Stephanie Garcia Richard as the Vice Chair of the State Investment Council as discussed and reviewed by the Council today. Seconds. Okay. Is there discussion?
I might have missed what you said in terms of the rotation. And what is the so-called term or sentence?
Mr. Chair, we didn't actually set a sentence or a term on that. You know, that's something we felt would maybe be better discussed and determined by full council. You know, best practice is anywhere from 2 to 4 years. But you know, as you know, Mr. Frank has served the council well over 7 years. So you know, if you, Steve, have any thoughts on that?
Whatever the council's pleasure is.
Well, I'm going to recommend, though, that we need to revisit it at least every 2 years. Now,
what?
At least every 2 years. Now, we have a situation here where yourself, as chair of the governance committee, and presumably the land commissioner as vice chair, you know, those are elected, hers is elected position, and to some extent yours becomes somewhat of an elected position because your position follows with the governor. So the challenge is having a term that might overlap an election, which could change the makeup of the council. So I just think we really need to think that through, but Because because if this governor and land commissioner, you have 7 more, just say 7 more years, even if we do a 2-year deal or a 3-year deal, it's not gonna line up with a 7 years remaining. So I just think we need to rethink how that works. But for right now, I would suggest that we limit the term to at least a 2-year and then revote or reassess or whatever.
So Mr. Chair, Member Austin, so I think that's a good idea to revisit, and I think that's probably true for all of our appointments and our advisory members. So just revisiting occasionally. I mean, it's not something that has been done in the past. I think it's good to be having some movement on council like that. So it doesn't mean that a term would be up. I hear you saying we would revisit it. Is that what you're saying in 2 years? So is
Yeah, we had
okay with that?
we had the whole issue of the problems we've had in the past were primarily because of concentration of power. And so I'm always concerned that, okay, we need to be rotating to prevent issues. Not that we're having any now, but just as a safeguard. So I'm a little concerned when we have positions, and I know that Member Frank has done a fine job, but he's been in the position maybe longer than would be, than we should have. I think we should rotate that. So my concern is, okay, if we're going to have it, and you guys maybe need to talk about the governor's committee, but if we're going to have, say, a 2-year term, I think we should limit the number of successive terms so that we can keep some sort of rotation. And that's got to assume that you have members that are willing to serve in those capacities too. But I do think we need to be rotating to prevent concentration of power in all things. So I mean, even in the investment committee or the governance committee, unfortunately, the audit committee, we've got one member that's got the real expertise. So anyway, that's just some comments.
Well,
Should this be something that the governance committee puts on their agenda to review on a periodic basis and bring before the SIC deemed appropriate?
I would be open to that, Mr. Chair and
I think that makes sense. I think it makes sense to target a reevaluation of chairs every 2 years. I think that's what we're suggesting. As you suggest, it wouldn't be necessarily a limitation on reappointment or continuation of appointment, in my view. Things are operating well. It's a small group. We have a limited resource. We have a number of members who are not very active on the committees, may not be appropriate or not willing to chair. So I think we don't want to necessarily strangle ourselves. But I think it should be on the governance committee's agenda at least every 2 years to reevaluate each of the chairs or even bring it to council.
Because, I mean, with that, on the governance charter that we kind of amended a while ago, we moved that term to a 3-year. There was 3 years in that, and so I think that really needs to be, we need to have some consistency.
And so, Mr. Chair, that's something that the governance committee is going to take on over the course of the next few months, is after the session. Is will be to look at the charter and revisit those types of things. So we'll be sure to look at that and make a recommendation.
Very good. Tim, you had a question?
And my only thing was that I think, however it comes out, it ought to be, the selection should be staggered with, through the election cycles. So I mean, wherever your 4 years are, it ought to be, the term of the vice chairman, in my opinion, should be staggered. Whereas when you have a new governor come in, if it comes from a different party or anything else, the vice chairman, in my opinion, it shouldn't just change because you have a new governor. I think the whole one ought to be here just to make sure that we have continuity, the way I see it. Some history about where we've been when you have a whole new staff come in.
Yeah.
And so I think
we don't have much control over that because people sit by legislative designation. So Stephanie's a member because she's got that role, and if she no longer has the role, she'll leave the committee. Same thing with Olivia and Tim. So I think that's kind of automatic. I don't quite see the issue. And we certainly are not a political group. We shouldn't be a political group, and things don't change just because we have a change in the governor, other than her right to appoint certain people, I
So,
think.
but I think that the point, if I understand, is not a political issue, it's the fact that, for instance, with regard to the last election, we had, what, 4 or 5 members of the council
Right.
change?
That's right, we
Well,
did. But
so
there's nothing we
therefore-
can do about that.
No, but I'm just saying, the makeup is different,
Correct.
and that the sitting group of council members at that time may decide that a change is appropriate,
Right.
or then, and that just, they should have the opportunity.
Sure, and I think
That, I
that,
think that's the point
I
that's
think
being
that
made.
makes sense. I think the council is always, has the right, as a council, to decide its own governance and how it wants to approach things. And we are not writing things into a constitution, so this will be our guide, and if the new council will never make us decide they want to do something different, they will do that. So, anyway, I think I like Olivia's approach. We will discuss it over the next few months and bring some recommendation to the council.
We do have a motion pending.
We do have a motion pending, and so we need a vote to approve Stephanie for this role. And all in favor? Aye. Any opposed?
That- My understanding with that was linked for 2 years. I think-
We haven't done, no.
So that we're gonna come back to that.
We'll come back to that.
What we're gonna, as I understand it, what we're gonna do is address the very issues
Okay.
we're talking about, and then figure out what we might
Right.
suggest to deal with those issues. I don't think we're prepared to deal with it now.
That's right. That's how
Although
I,
I'm not, I agree with you, that I get what you're
But, I mean, the challenge too is if someone's gonna take on a role, it's always good for that person to know how long they're taking that role on board. How long a commitment am I making, right? So, okay, that's fine. We'll address it. I just don't want this to be an open-ended
Sure, should have thought about that.
all right, so I think the vote was unanimous, even though there was some discussion. All right, thank you very much. You have to bring your own gavel. I didn't bring mine today. All right.
Okay, so we are on to item 5C, which is the consent agenda that was being discussed a little bit earlier, so this was also discussed at governance. And really, I would like to turn it over to Vince to go through this, but my understanding in a nutshell is that this is meant to really make our meetings, our monthly meetings more efficient, less duplicative, by allowing for certain items to be on the consent agenda, including re-upping investments as well as investing with funds that we have previously invested in before. And so with that, I'd like to turn it over to Vince to go into more detail on the memo.
Thanks, sure. So the office made a recommendation to the governance committee that you consider a consent agenda for our routine type items. And we took our best shot at identifying what is routine or specifying what we thought was routine. That's the bullet points that you can see in the memo on the first page. We made some further refinements with regard to the private fund series commitments, just to kind of further define that. You know, the council's voting record is in the minutes. We follow along with that just to see what sort of direction you're going. Most of the things that fall under this routine matters receives a unanimous vote or something close to it, where there's only 1 or 2 dissenters. Very few times where we have things that would fit under these rules would we have a close vote by the council. And we're coming up on, or you're coming up on 400 votes since the beginning of 2011. You turned us down twice in that time, out of 400. But there's also been a few close ones, a couple of 5-4s and 6-3 type votes, but not among these routine investments. So when we bring a re-up, you almost always come unanimously or with just a small split in the vote.
I could just, I have a couple, one question is the explain a little bit the commitments to private funds in a series, like if you're in, you know, TriStar 3 and they have TriStar 4, and it's essentially the same? Is it essentially the same? Is it different? What is?
So a recent example is the one you voted today on Kickstart. That would have fallen under these rules. That would have been a consent agenda item.
So that, because they're extending, giving them more money in the same space?
Same strategy,
Okay.
near the same size,
Okay.
same management team, no material changes from
Okay.
the thing that you voted on.
Moving to the next dot, I guess, no re-up commitments to existing managers for strategies which are materially different. Will that be a staff decision to help us figure out, I mean, to let us know what those differences are?
That's right, and all the investments, Harold, will still come through the investment committee, so there won't be any changes at the investment committee level.
It will just be at the
So
council.
you all will also be able to see what
Okay.
staff's seeing to determine if it should go on the consent agenda or not.
And the process that would be, I guess, at the beginning of on the agenda at the beginning, I've done this on other boards, so obviously at the beginning of the agenda, that part of the agenda, any council member who wishes to bring an item out of the consent agenda into the regular agenda can do so.
That's typically how these work, but that's up to you to set those rules.
Yeah.
We just suggest the process.
Yeah. No, I think that's fine, as long as, you know, if there's something that someone, after having reviewed the materials, has a significant question about, obviously they can do that. But I think this has the potential to make things a heck of a lot simpler.
I guess I'm sharing now. Remember
Along that same idea, as I was reading this, I was thinking we would want these to come before the investment committee. And these are the items that we would look at the investment committee. Number 1 is the same fund manager. Number 2, same portfolio management team. Number 3, same strategy. 4, same investment process. 5, it still meets the SIC asset allocation strategy and pacing schedule. 6, the performance of the prior funds in the series met expectations and are in top quintiles. 7, the fees and terms are the same or better than the prior fund in the series. 8, you compared it with other choices and it still was the best in class compared to other choices. And 9, you're investing a similar amount as in the prior fund, and that comes to this 250. Most of our funds that we invest in are 100, and I'm thinking 250 is a little bit on the too big a leap. I'd say take that out and just say re-ups that are no more than 150% of the prior fund, because 250 is 2.5 times the size of our average investment, which is 100. So the investment committee would look at all of those items and then say, yes, this meets the criteria for the consent agenda. So it's still, are the materials still going to be in our SIC materials if people want to move it from the consent to the regular agenda?
We don't anticipate any changes.
Okay, we just
the
have
only
it.
change we anticipate is that these investments would go on a consent agenda. Otherwise, same materials, still have access to my asset class directors, myself, in terms of discussing the investment if you want, so forth, so on.
Oh, I think this is just a terrific idea. I'm really.
I guess there is one other change. If we put a re-up on the consent agenda and someone wanted to pull it off, the manager would not be here.
But our consultant and asset
my
class
asset
director
class
would be.
director and myself would be here.
Which I think that's, and we've already spoken to the fund manager because it's a re-up. So I think this is just a terrific item. I sometimes think that we don't get to some very important items in this at the SIC level because we're so involved in each investment that we're not looking at the whole fund and other issues.
I'd like to make another potential suggestion, and that is that the investment committee meetings are available. The dial-in numbers is present in the documents that everyone on the council gets. If you read the materials and you take a look and you decide that there's something about which you want to speak, doing it at the investment committee level would make a heck of a lot more sense than bringing it up here at the council meeting. A lot of times the questions at the council meeting indicate a not particularly diligent reading of the materials. And that's a little bit accusatory, I apologize, but the point is, if you come to the, if you have something you want to talk about, dial into the investment committee meeting and participate. And that way you'll have a lot of the significant knowledge before the meeting, so I think you have to be important.
I guess the only thing I would say in response to that is that the public is not necessarily present at the committee meeting. They can be present here in person via watching us on webcasting, and so that's kind of my concern with this consent agenda recommendation, is that some of us on this council represent the public, and so we have to do our
committee meetings public also. Our committee meetings are also public.
Yeah,
And
they're open to the, committee meetings are open to the public as well.
they're not webcast.
They're not webcast.
No, but they can certainly come. We've had people come to the investment committee meeting on a fairly regular basis, so I think that may address your concern.
Thank you. And Senator?
Yeah, I think investing $250 million on a consent agenda, I think it opens us up for an awful lot of criticism. You know, $250 million is a hell of a lot of money to people in New Mexico, and I don't mind a consent agenda on some of this, but I think $250 million is way too much money, and I think it only opens us up for ridicule if something ever happens to go wrong. I mean, to approve something on a consent agenda, it makes it look very politically suspect. I don't care how you look at it. I think that's way too much money to put in on a consent agenda.
So the recommendation was to change that to a percentage.
My recommendation was no more than 150% of the prior fund in that series. Plus, I just went over the 9 points that the investment committee will have already confirmed before we recommend it for the consent agenda, and the materials will be available in the SIC materials for everybody to look at.
And I mean, you know, that's one thing, but 250, when, you know, if your committee does that and the public hasn't really had an opportunity to read it, I mean,
Are you recommending that we amend the document by Linda's suggestion? Is that what you're saying?
I think it's better than what it is. Yeah, I'd amend
Okay.
that. It's better than what it is.
I make the motion. Is that a motion we have to amend? I move that we amend the document to, what did you say, 150%?
Right, remove the 250 and leave in, there's already a no re-up. Commitments will be, let's see, no re-up commitment which represents greater than 50% increase from the prior commitment will be placed on the consent agenda. That's already there, so just take off the 250.
Okay. Yeah, that's my motion. Is there a second?
Okay, so we have a motion to amend the language and a second. Is there any objection to that amendment? Is there any objection to the amendment?
No, I was getting ready to vote.
Oh, we don't have a motion on the consent agenda.
Well,
We have a
we're voting
motion
on
on the amendment.
A motion on the amendment, I'm just saying, yeah.
To strike the 250.
To strike the 250 and replace it with 150% of the amount.
I don't think so. I think just striking the 250 solves it, because
Solves the problem.
150% is in another paragraph.
Okay. So the amendment is just to strike the 250.
If I could, Madam Chair, so it looks like that first bullet is just meant to have a complete dollar cap in order to say in no case would we ever put anything above 250 million on the consent agenda. So I don't know that the second bullet gets us there, but what if, so, were you gonna ask?
Different types of fund investments, I don't know, we just limited it.
So, Madam Secretary, we actually have staff in this room.
Okay.
So that first bullet points to address exactly what Tim said, is that large investments wouldn't be put on the consent agenda. So 250 is not the right number. It's there exactly for what Tim has brought up, is that big investments won't be put. So if
Of any type.
Right. So if 250 is not the right number, maybe change the number. But we do have some guidance. The second bullet point guides us relative to the investment that you made in the prior time.
Well, I heard discussion that 150 was the sense, so that's my motion, that we amend this to say
Right,
150.
and your motion is still on the table. We want to hear from Evan.
That 250 is a safeguard to you. By deleting it, you are giving yourself less oversight.
So then maybe we just
There are
lower
3
it.
bullets on the thing, so if you don't like the number, set the number at where you want it, but that 250 only reflects one investment parameter.
Senator, how do you feel about 150 instead?
That's fine.
Would you
Restate
revise your
Yes,
amendment?
I don't think I have to revise. I thought that's what my motion was to.
Well, it was to take off the 250.
No, okay. And my motion is to adjust that. I move to adjust the language to say, no commitment exceeding 150 million will be placed on the consent agenda.
I'll second that.
Great.
Okay, there's a revised motion and a second. Any objections to that amendment? Okay, so all in favor?
Aye.
Any opposed? Any abstained? Yes.
I'm going to suggest language change in the paragraph below that where it says members will be able to request that an item be removed. I would suggest that be changed to any member instead of members, because members could imply that multiple people would need to agree. So I would make a motion to change members to any member.
Second.
All right, so we have an additional amendment to change members to any member. Any discussion? All those in favor?
Aye.
Any opposed? Any abstained? Okay. So now we are on the actual passage of the consent agenda. So is there a motion?
I will move the approval of the consent agenda.
Okay, so we have a motion by member Frank, we have a second by member Lavender. Any discussion on that motion? Yes?
Right. It seems to me like some of the routine stuff that it doesn't really address is more things like the minutes, those types of things. Should be included in here, not just investments. So, maybe that's something we ought to be looking at. Minutes ought to definitely be included as routine. And the only thing that we specifically addressed with bullets, and so I would make a motion, but now we're already on the final deal, but I do think minutes ought to be included. And then if staff has, if a member has a concern about the amendments, about the minutes, we should be able just to bring that to staff, and staff could make, typically a clerical correction if it's needed. I don't think it's been more than that in the past, but, so I would suggest that that gets included in here.
So we have a motion right now on the table to approve this agenda item. Would you be willing just to?
Absolutely. I think Lee's point is terrific. I would like to amend my motion to include these recommendations that the consent agenda also include.
I think you're all doing this to me on purpose.
This is the most process we've ever had.
I'll second.
Okay, so is that a motion, Senator? Is that a motion?
Yeah, just withdraw your amendment, your motion, and I'll make a motion.
Okay.
I withdraw.
That was my
All right,
motion.
so we have a motion by member Rawson to add minutes to our bullets, and a second by the treasurer. Any discussion on that amendment, huh?
Question.
Good, thank you.
I told you.
All right, so with that, we need to approve this agenda item. So, all those in favor?
Aye.
All those opposed? I'm going to actually vote against this agenda.
Is this the motion on my motion?
No,
This is on the actual approving number
The
5.
consent agenda.
It's a vote consent agenda, I just want to be known on that.
We just don't know his amendment.
His amendment?
For my amendment, I'm voting for my amendment, but I'm voting against the consent. I
All
don't know
right,
which motion
so
we're voting
let's go back to the vote on the amendment.
Aye.
The vote on the amendment.
Aye.
Okay, any opposed? All right, with that, we have an amended item. Now, do I have a motion to actually pass this 5C?
Based on the recommendations of the Governance Committee, I move that the State Investment Council adopt the approve the adoption of the consent agenda process as outlined in the consent agenda memo as amended in the meeting today and as discussed, reviewed, and memorialized by the council today.
Second.
So we have a motion by member Frank and a second by member Lavender. Any discussion on that motion? Any further discussion? All right, all those in favor?
Aye.
Aye.
Okay. All those opposed? Okay, or
6 to 4.
6 to 4?
6 to 4.
Any abstentions? All right, so with a 6 to 4 vote, that motion passes.
All right, great, thank you, Madam Chair. And so I did want to turn your attention for item 5D to page 325. And this is the current list of committees and committee members. So we had a discussion about this in governance, and also just really want to encourage everyone that sits on the council to participate in a committee if you can. And so take a look at these, and please let Carrie know if you would like to be added to any of these committees. And you see the openings there. And then similarly on the advisory members, if you have anybody that you think would be a good advisory member, also please send their resumes to Carrie, and then the governance committee will be looking at that in a future meeting. All right. So I think that,
Was there any additional questions on item 5D? Committee compositions.
I might comment if I can. I heard a volunteer for the governance committee. Right?
Excellent, excellent. What action do we have to take?
No, I think we just need to let them know. And
The treasurer wants to be
Ken
on
has
the other
indicated to me that he's willing to serve on governance.
Excellent.
So we need a resume.
Thank you.
Reference checks.
Actually, there, so I didn't have to.
all right. So if we could just send any interview parties or recommendations to Carrie, please, that would be.
Carrie, did you make a note of the treasurer wants to be on governance?
It'll go on the minutes.
Thank you.
Thank you. And that's all I've got, Madam Chair.
Okay. All right, with that, we are on agenda item number 6, closing matters. I don't know how to do this old or new business.
That's it.
Is there any?
Is there any?
Madam Chairman,
Yes,
I have some old and new business.
yes, member Jennings.
Our old conflict of interest statements are gone, and everybody needs to file a new conflict of interest statement if you have them.
That's absolutely correct. By the end of this month, actually, January 31st. So just remind our new member and all of our new members that our conflict of interest statements are due to the Secretary of State by January 31st. So do we file those with you all?
We're glad to facilitate that for you and get with Carrie or me, and we'll make sure that.
Any questions on conflict of interest statements? Thank you very much for reminding us.
Yeah, they're real general, you know, where your income comes from, everything you know.
All right, with that, our next SIC meeting is Tuesday, February 25th, right here at 9 a.m.
Madam Chair, public comment?
Yes. And we have someone,
We do have public comment.
okay, all right, we have someone for public comment, very good. We have 2 folks. Welcome. Welcome.
Thank you, Madam Chair, members of the committee. My name is Greg Swift. About 12 years ago, I became concerned enough about climate change that it's really changed a lot of my life ever since. As a homeowner, as a consumer, as a member of the SIC in the Milwaukee Valley, and as a PhD physicist working at Los Alamos National Lab since 1980, doing alternative energy research. I was really happy to see your decision a few months ago to put more investments in the state. And I'm here today just to urge you to make some of those investments in renewable energy and energy efficiency. I'm getting the sense from attending the meeting today that you're a cautious group, and you try for consensus, but you don't always achieve it. Another cautious group is the IPCC, the Intergovernmental Panel on Climate Change. They're a team of scientists from all over the world who look at the scientific evidence and try to make recommendations about the world, what the world should do. And their recommendation now is that the world should reduce fossil fuel consumption about 50% in the next 10 years. And that's just to give our great-grandchildren a good chance of having as good of a life as we have. That's a tall order, 50% reduction in fossil fuel use in 10 years. And as I think about the leverage that I can exert personally as a scientist, as an SIC member, and as a homeowner, and then I think about the leverage that you can exert, I'd like you to consider that leverage. There was discussion earlier today when the Kickstart people were here about the leverage that investments exert to draw more private investment in. Let's just think of one example. Solar, utility scale solar energy. If New Mexico does its fair share of that 50% reduction in fossil fuel use in 10 years, we'll need to invest billions of dollars here in energy efficiency and renewable energy. And that's a tall order. But some of your internal documents, reports from Sun Mountain Capital, talk about a 6-to-1 leverage that your decisions exert. You decide to invest a certain amount of money in the state, and that message draws $6 of private investment in for every dollar. So think about that as you make your decisions. Utility scale solar. Arizona has 4.5 times more solar energy installed than New Mexico does. And they have about the same land area and about the same amount of sunshine. It doesn't matter if you look at that number on a per capita basis or per unit of state GDP. We're behind Arizona, and there's a huge potential to catch up there. And that's just in solar energy, never mind other kinds of renewable energy or energy efficiency. So I urge you to decide and announce that you'll put a pretty good investment in New Mexico renewable energy and energy efficiency.
Dr. Swift, thank you very much. Thank you for reminding us of our responsibility and our leverage. And we don't respond to public comments, so.
I would like to briefly. Okay.
If you'd
I
like
will
to make
talk to him privately.
that's exactly right. Thank you. Thank you for understanding that. Yes.
Thank you.
Madam Chair, we have Mr. Knoll here.
Good morning, or good noon, or whatever time it is. Jeff, Madam Chair and members of the committee, Kenneth Knoll with the Investing.us. I was not able to attend the November meeting, but I was on my way to California and did stop in a rest stop between Barstow and Mojave across the street. Wanted to say congratulations to staff and congratulations to this committee on your commitment to New Mexico and investing in New Mexico. I did have a talk with a truck story for it, but the governor's not here, so I'll save that for when she's here. But I'd say thank you on behalf of the New Mexican entrepreneurs that I meet and work with and myself. Another point I want to say is I came to the January meeting and I heard 2 presenters who were getting funds talk about investment in New Mexico. That is fantastic. Every investment that goes out, there should be some commitment to New Mexico. So that's all I wanted to say. Thank you. Congratulations. And for the governor, for the record, what is happening is a direct reflection of her leadership and her commitment to la gente de Nuevo Mexico.
We will pass that on to her, sir.
Thank you.
Before I take a motion for adjournment, I do also want to add my thanks to Member Frank for his many years of leadership on this committee. You know, we are accused of being a little bit risk averse, and if you saw the decade of where this committee came from, you may understand that a little bit better. And you have, you know, led the way in bringing us to where we are today, and so I'm very grateful to you for that. I'm grateful to the council for putting your faith in me to lead when the chair is not here. And with that, I can take a motion for adjournment.
So moved.
Second.
With that, we are adjourned.
Thank you.
A lot of trouble if we have no battery.